And then we will, there we go. And we are good. And there we go. So welcome to Domainer Week #1, maybe, I don't know. Domainer Week came from the soon-to-be ashes of the domain social, which will soon be a little restructured. Well, let me turn the volume down on YouTube. So we are live on YouTube. We are live in Clubhouse. And we're going to have a couple of glitches along the way, and we'll just roll with it. Yeah, so as I said, soon to become DomainPodcast, if you can see behind me. It's not the entire end of the domain social. I have lots of things to say, but I also realize that I have 9 days to say it all. So I'm just going to take about 5 minutes to cherry pick some of the things here and there. If you guys have any questions, feel free to ask them. And again, use the Q&A if you have anything for the panelists specifically. We're going to just go with the flow here. There's some questions that people submit ahead of time, but it's kind of more of a social feel to it. Sometimes you'll see certain panelists here and there. You'd think, oh, Ron Jackson is here with Paul Nix, and he's gonna. They're both gonna participate equally. Both of them have to say they have a wealth of information, insider knowledge would be the understatement of the year. So like all these panels will be just, I wanted sort of dynamic where maybe Paul will ask Ron a couple of questions about his observations, and obviously I'm sure Ron will ask some of Paul, and I'll ask some things of them both, and that'll be kind of the format for the week. I'm not going to be too stressed on all the minor details, making sure everything's done to the T. This started about 2 weeks ago when I already said this story before we went on live, but it started 2 weeks ago when I knew I had more than 1 week's notice before going back to work. So about 2 weeks ago, I knew I wouldn't be going back to work until at least the beginning of September, which meant that finally, as most of you know, when I was doing the domain panels a while ago and I wanted to do more of them, 1 week's notice was just not enough to get them done. So now with 3 weeks notice from 2 weeks ago until next Friday, I decided to do a few panels in between what would be the last domain social. And then a few panels turned into a few more and a few more. And what we see now as a pretty extensive set of panels for the week. I'll just actually share a screen while I do that with here. These are some of the people who have been very generous with sharing their time over the next week. What do I need to tell you all? So this is all, obviously it's all free because you're all here. And the point is pretty much to, have fun, end the year and a bit that I did the domain socials with a bang. And obviously that was taken over from when Mike Cyger started the socials back in March of 2020 when the pandemic started, and he called it Quarantine Social. I don't know why he didn't call it Domain Social, but anyways. And when I took over, I changed it to Domain Social. But I'm really grateful to him for starting that because really when he started his, I missed the first few weeks. I didn't know about it. And then I joined in chat only because I didn't have a microphone or a camera connected to my computer ever. And then I finally got a microphone for a couple of weeks. I was audio only. Then I got a video for the last month and a bit. And so for those of you who are afraid of getting on camera, a lot can be done in about a year. I've got 1 minute left, so I'm just going to say, the point of this is really to have fun, to help everybody get informed on domains, raise funds for charity. You can go to domainerweek.com. You'll see the schedule there. At the top of the page are a bunch of, I'll just put up for 1 second over here. A bunch of charities in the middle box. You'll see. Here we go. Share. You'll see. That's the goal. There's a link if you want to donate to. It's a GoFundMe link. I just set it up. I'm tinkering with a bit. So don't necessarily rush. What I like is a couple of you to make a donation to the thing at some point, and then once things go through properly, I will really promote some more. And what else do we need to say? The schedule is all there. And I do want to just say thanks to everybody who got on board and helped out with this. It's been a crazy little bit. I didn't have time to get my my first COVID haircut in over a year. That was on my list of things to do. I was going to go get a couple more shirts, but you know, the one thing I'll end this preamble with is so when Paige asked me to produce his conference last year, which was amazing. It was a lot of fun, a lot of rushing around, but a lot of fun. But when he did that, there's one tip he gave me. So at one point I saw him get up before we started and like, you know, put on a different shirt, whatever it was. And I was like, he goes, get yourself, I forget what he called it, either a TV shirt or a video shirt or whatever it was. Cause he goes, you know, so when if you're doing different days, different cuts, you can edit things together and it doesn't look strange because you're wearing different shirts. So, well, I didn't get a new shirt for this week. I did get a beautiful gift from Morgan Linton, and I figured that's my excuse to be wearing a t-shirt all week is I got a hashtag domainer when he sent me this after we did the panel last time. So on that note, I think that's about it. I tend to ramble a lot. It's 1:01. And I'm here live with Paul Nix from GoDaddy and Ron Jackson. What I'll ask you guys to do is just tell us a little bit about yourself, how you've gotten to where you've been, and we'll see if even one person is surprised in here. I think both of you have been very well known in this community, and I'm really grateful to both of you for being here. So I guess, Paul, you're on top. You can go first.
Cool. Yeah. Hey, gosh, I've been in the industry now and at GoDaddy for going on 15 years. So call it 14 and a half years or so. 2007 Traffic was my first conference, and it sort of kickstarted the passion for the industry. It's typically in a large company like GoDaddy, people move around, a lot of internal movement, shifting from department to department, learning new things. I am not one of those people. So I came into GoDaddy as engineering lead on the cache parking products, learned about investing, domain investing, and just kind of stayed here. So now I run the business for GoDaddy for the Domain Investors Group. Includes all things that touches you guys. So parking, the Afternic acquisition, the Uni acquisition, domain portfolio management, any things that you can do with buying, selling, monetizing, managing domains kind of goes through my world.
Nice. Yeah, I was actually, I know before you're a lot of aftermarket and auctions and stuff like that, and so I know you've progressed a little bit since I started domaining. It's like, oh, where are you? GoDaddy is such a big company that it's like it's good you kind of stayed where you are. So that means you're the right person to have here today.
Well, funny enough, the industry's growing, so it's easy enough to grow from a small team in GoDaddy if the entirety of the industry grows with you.
Oh,
so as we've grown, the entirety of the industry, I think, has grown. If you think of 2007, ASPs and sell-through rates and things of that nature were not nearly what they are right now. So it's just the entire group of us has all kind of grown up together, I think.
Yeah. So spoiler alert, guys. Yeah, you can skip the rest of this. It's going well. All right, Ron, how would you just? Oh, geez, I feel so silly asking this. Everybody's Ron Jackson. Come on, domain industry legend he's been so gracious with providing us with so much insight and data on this industry. And I'm going to stop and let you just give a little bit of a brief background, but I feel silly asking you to, but I'll do it anyways.
Well, thank you for that, Arif, and I appreciate the invitation to be on, especially with Paul, who is a guy that I have a great deal of respect for, and also one of the real beacons of this industry. So we're going to have a lot of fun today with this. I really followed a long and winding road to get here. When I was a teenager, I always wanted to be a broadcaster. So I went into that business, went to broadcasting school, did radio, and from there advanced to television. I did that for 20 years. And when I hit about the age of 40, I had that little desire that I think we all get at some point, that you'd really like to run your own business, then work for someone else, and started thinking that, man, I would really like to have my own record store because I love music. And that's why I became a DJ and started when I was a teenager. So the timing ended up being really good. I left television in 1989, but I had opened my first record store the year before. And it took off because that was the point in time when everyone was replacing their vinyl libraries with compact disc. So the beauty of that was that you didn't make money selling new product because the markup was so low. And now you're competing with Tower Records and Sam Goody, and they work on margins of like, if they make 50 cents, they're happy. And you can't do that as an independent business. So what happened there is we would buy and sell used. We would do new, but we also really made our money on used product. People would bring in used CDs to trade. You could pay $3 to $5 and sell them for like 6 to 10 and sell them all day long with 100% profit margin. It occurred to me today that I was one of the first guys in the aftermarket. It just wasn't the domain aftermarket. It was the CD aftermarket. A big difference too, because in the CD aftermarket, you were popular because you sold lower than retail, where in the domain aftermarket, we all sell higher than retail. So kind of a different thing, but it gave me a little taste of that. But anyhow, the internet came along and wiped out all of the record stores, Tower Records, Sam Goody's, me. I think we closed the store in 2000. I was casting around for something else to do. And the only thing I remembered left from the music business was my domain name. I had musicparadise.com, and we ran mail order business off of that. And that actually had become a very important part of our business. So I thought the internet killed me here. And the one aspect of it that was showing some growth was the internet. So whatever I did next had to be internet related. So I'm casting around for something to do, and one day stumbled upon Domain Name Forum. And this was spring of 2002, and guys are talking about buying and selling domain names. And it didn't make any sense to me. To me, you bought a domain name to build a website on, which I had done, but how can it have any value if there's nothing on it? I didn't get the concept at all. But as I'm listening to people talk about it, and they were making some really large sales, I'm just like utterly fascinated by it. I think like all of your listeners are, they go, as soon as you're exposed to this business, how can you not be really fascinated by how the whole thing works? So I got into it with no intention whatsoever of starting a publication. I had been out of journalism for 12 years, and basically I just wanted to buy and sell domain names and learn what the secrets were. So I'm casting around, though, looking for more information. And in those days, the pioneers didn't really want to share a lot of information. If you see, a big pile of $100 bills over there, you don't go, hey guys, look over here. There's a big pile of $100 bills. You better run over there. So they didn't want to tell you what time the drops were and all of these different things. So no one was writing about it. So I said, what this industry needs is a trade publication, because every other field I'd been in had one, but I couldn't find one for domains. So I said, well, I could do that myself. And so that's how DNJournal started. But basically it was meant to be just a networking opportunity whereby profiling and interviewing some of the original guys from the 90s, I could learn through osmosis. It never was meant to be my primary business. But then Cito, I think, was the first company who came along and said, asked me about advertising on it. And then once they came on that first year, others followed, and it kind of took on a life of its own after that. And actually, it kind of pushed my domain investing by necessity to the background for several years, though I always have done it all along the way and still do it to this day. So that's how I wound up here.
Nice. I think it's funny you say that, because I'm probably, I'd love to follow in your footsteps. My dream was to have a record store at one point. I was a former DJ, nightclub manager. I still have 40 crates of records that I have to figure out what to do with at some point. But then I started a music website. That's my introduction to domains. I don't want to hijack this thing, but the power is there. I had a music website. Started it in 99, and then by 2001, I had over 30,000 members in a forum, and it was really a lot of fun. But so if I can be where you are down the road, that would be my honor, just to be able to help this industry as much as you have. So I guess we'll get into things. I'm not too sure where you guys wanted to start. I want to keep things a little casual. I have a few questions, but is there anything outstanding that the world needs to know about the world of domains right now? How things are going, shipping up, I guess, maybe after as the pandemic sort of evolves into wherever it's going. I don't want to say going better, because I know some corners of the world it's not quite, but the economies are changing here and there. Things are stabilizing a little bit in many places. Are you guys seeing that in the numbers?
Yeah, Paul sees a lot of data even that I don't.
I see a lot of data. Yeah, yeah.
Now the question I have is, are you allowed to share that data?
No, you know what? I can share directional data without being, there are things. Yeah, gosh, sharing data is one of those wonderful things I would love to do more of. And we used to share sales data fairly regularly, and then we went public and we stopped, and then last year kicked it up again, and now we share top X number of domain sales from 3 months in the rears, and all sorts of restrictions that our public persona requires. So unfortunately, I can't share a lot, but I can say that over the pandemic year, what we saw was a big shift to online, which just makes perfect sense. You've got a couple of dynamics. You've got brick and mortars that need the online presence to succeed. The local mom and pops were shut down, or the shop local things were popping up locally, but the consumership of local stores all throughout last year really dipped. So we saw a lot of transitions there. But then also, part of it is, as you get workers, large company workers, staying home, it's a lot easier for them to start a side gig, to do something on the side, to do other things. I just saw an article come out today on companies trying to retain all these employees that are quitting because they started side gigs. And employee retention is a big problem for large companies, sure. But when you think about the opportunities for this industry, they're quitting because they found something else. They found a side gig. They started their own business. They're doing something else that's interesting. So I think that's really what we're seeing come out is, as far as the growth of the aftermarket. I mean, I will say that in Q1 of this year, I'm not sure how into the industry you guys really, really are, but if you're so into it, you listen to earnings reports from places like GoDaddy, I feel bad for you. I have to listen to that stuff, but so I will give you a little bit of a snippet. So after Q1 was the first time that GoDaddy actually disclosed that aftermarket was what was growing. And it's a big part, I think, that Aman came out and said, GoDaddy's aftermarket is roughly 10%, and that's trips the threshold of what we need to talk about. But for me, that was really big moment for the aftermarket, because we became significant enough to talk about in this massive earnings report. So I think that really tells you how the growth has been going. And it's been units coming in. We've had a few things where we're trying to get people who just have we'll call passive inventory, these serial entrepreneurs that register 10 to 50 domain names because they think they're going to make great businesses. Those guys typically have really good eyes for what is brandable, what may be interesting. And so you start to talk to them about, okay, you didn't do anything with the name you've been holding on and renewing every year for 5 years now, maybe listed in the aftermarket. And we've had good success doing that. So more inventory, higher sell-through rates because the demand is higher from all these folks that are quitting their jobs doing their side business. More demand means more higher average sales price. So all those cool KPIs and metrics are positive. So I think that, as the domain investors go, I hope that sales have been coming through and that you guys are actually seeing results of the dynamics. So if you're raising your hand, Ron, I know you participate as well. So I think there are a lot of dynamic things happening in the aggregate industry that's, are quite positive.
Yeah, I think often it's the change that also drives, I think, sales and domains, right? Because maybe there might be 5% fewer businesses today than there were a year ago. It's probably a little bit less than that, but let's say it's 5%. But the reality is that 20% of businesses closed, and then 15% more got added, right? Which means that those 15% need a new domain. So even if the net is a little bit slower or lower in terms of companies open, that change every one that came back in a different sort of form needs a new domain, needs a new address on the web. So yeah, I think we're in a good industry. Ron, are your numbers is your tracking showing the same sort of story?
Oh yeah, absolutely. It's up tremendously. Incidentally, I don't want to downplay, or Paul shouldn't downplay how important it is for that roughly top 20 that they put out. Even though they're in arrears, we chart anything that's being reported for the first time within the preceding 12-month period. And the thing that draws a lot of eyeballs to our industry from people who don't really follow it at all are the big sales numbers. So when I always make a point of pointing out that what we report's only a small fraction. I mean, it's impressive when you look at that report, everything that's happening, but that's just the tip of the iceberg. And when GoDaddy puts out that report from 3, 4, 5 months ago, whatever it is for the month, you see on there, usually there's at least a half a dozen really healthy 6-figure sales. So when those get charted, it's like, whoa. And those are things that would have been out that month. And if you're thinking those are hitting the chart every month, you would have a much better idea of how big some of these sales are. Another important point that he made that doesn't get talked about that much is the side gig thing. Generally, we talk about this boom that we've seen in as a result of the pandemic. We think of it, or I do anyhow, because I see so many big .com numbers. I'm thinking of established brick and mortar businesses who are well-funded, who can't do normal business in the physical world, so they have to beef up an online presence, or if they don't have one, they've got to create it, and they've got money, and they're going out and spending a lot of it. One of the things particularly that's evident about that, summer is usually a fairly slow season, but when we come up on our next sales report next Wednesday, it'll be the 7th consecutive report that the chart's been headed by a 7-figure sale. In fact, the next one will be 2 7-figure sales. Wow. And that used to be something we didn't hear of that often. You might go through a whole year and only have 4 or 5 7-figure sales. We've had like 10 this year already, and 2 this week. But the biggest one of the year just came out. I think I reported on, it was Monday, Hippo.com sold for $3.3 million. And Larry Fisher this week sold Near.com for $1.15 million. And Larry just the week before had sold Marketing.com for $2.5 million. So the numbers are really amazing, but it isn't just at the top. Those are important, as I say, because they're such attention getters, and people see those headlines in mainstream business and they go, what's going on over in this domain sector? And I think it draws a lot of people into it. But as you go down the report, you'll see like dozens and dozens and dozens of strong 4-figure .com sales. And even beyond that, the .coms have won the battle of dominance, but this thing is really lifting all boats, because you're at a point where you have a lot of small to medium-sized businesses are coming online for the first time, and they may want a specific word, a one dictionary word, which is the hottest thing in .coms right now, but they really want that word, or they need a 3-letter acronym, and they look at .com and it's going to cost you a lot, maybe 6 figures, or more than likely it's not available at all because it's already in use. So some of them are by necessity looking for their next best option. And so that's helped a lot of other extensions. The whole time I've been in this, I had decided early on that I was going to concentrate on .com. I like the .orgs because they're very well trusted, and in certain fields where they have a lot of value, particularly medical, education, and so on. And when I came in, I liked the .us because that .us ad is what alerted me to this business and brought me into it. So and the CCTLD thing made a ton of sense to me as a geographical locator. So I bought those as well. So I'm seeing all of that group coming up to levels that I haven't seen before all this year. And I think this is all driven by a mad rush to get online. Otherwise, a lot of them won't survive.
Yeah, I'm fascinated that .us is one that you've invested in and that is doing well enough for you to continue to invest in. And that's one of those, if you think of country codes, US is not thought of, I think in our industry, certainly by some retail buyers, because you're having success with it. In our industry, it's certainly second class citizen or third class citizen to, certainly com is the default for US, but then you look at, of course, and IO and AI and some of these sort of, they're country codes, but they're used generically. And then the real country codes, that like, the co-UKs and the Australia ones and CAs and such, that are actually used by themselves as regional. So I think it is an interesting anecdote of yours that the .us is doing well for you.
It's funny you mentioned .us because I was doing a couple of planning sessions with people who from the social who wanted to come on and help me get some questions. And actually, I think it was actually Michael Cyger when he mentioned something about .us, and it just triggered me. I go, because he was mentioning that. So GoDaddy registry, I think recently kind of, I don't know, is it acquired or has a stewardship? I'm not too sure what the term would be, but I think is responsible and caretaker maybe is the term. And so that was with GoDaddy, and automatically clicked my head. Ron, you're just starting a new project for .us, aren't you? Like
yes, I actually did start a new website devoted to it and launched appropriately enough on July 4th with American domain names, it's called, and it's at adn.us. And that project for me was kind of like I felt I owed .us a debt. It hasn't been a great investment, I'll be honest with you, over time. Like I'm doing really well with it the last 2 years, but it's been like holding those for what's been 18 years now. But I always believed in it from the start, and I thought its day would come. And so because I saw this magazine ad for .us being open to the American public for the first time back in 2002, that's what piqued my interest in domains and ended up leading to me finding DN Forum. So I've always felt I kind of owe it a debt. It's been a revenue stream every year, generates a little money. If I put the same money in .com, I probably would have been considerably better off. But I still have appreciated it, and it's getting stronger. So I felt like I wanted to do something for my own country's country code, because I look at .de, which is a monster in Germany. People just love that over there. And they have 13 million. Everywhere you travel around the world, you'll see a .uk, a .it in Italy, a .nl in the Netherlands. And I'm thinking, why, just not right that .us isn't on that level. And they started kind of with their hands tied behind their backs because it wasn't open to the American public when the system started. That was reserved, and it was only used for the government. Law enforcement could use it. Schools used it. Yeah. And they had a horrible naming system, which was actually fourth level. You couldn't register one word .us. There's like a bunch of dots. It had to be US, then a state locator, then a locality locator, and then something. And this is a true story. The sheriff's cruisers in our town used .us because they were one of the agencies that did it back then. And the URL took the entire back of the cruiser that they had printed on there. And I go, this is really just not workable at all. So when the whole thing opened in 2002, now anyone can register it. So it started way behind the eight ball because .com had already been out for more than a decade and had taken ownership of the market, which hasn't changed, probably never will change. And so that's a tough place to come from behind.
Yeah. So here's I'm in Canada, and so I think .ca. I think in a lot of these other countries, the prevalence of the CCTLDs has a lot to do with the fact that I think most of the technology companies at the beginning of the internet were more focused in the United States, and so they just gravitated to .coms. And then as other countries caught up, the .coms are not available, so they went with their local ones. And I was curious, like, I don't know, Paul, if you have access to this kind of information, but like in the US, like as the .coms, like the one words obviously get saturated, but even the best of the two word .coms, as they get saturated, I don't know what kind of data you get, but do you know, is the .us really starting to be an alternative because those other ones are starting to be either out of the price range or the budget of the newer businesses that start up?
Yeah, and I think that not as much on the .us. So .us, I think, is one that will likely try to distinguish and push a little bit harder. The prior registries, just didn't do a lot of like proactive stuff. I think that the alternatives are always going to be, if your first isn't taken, do you go longer on the SLD? Or do you go, different on the TLD? And as being involved on the search side on GoDaddy.com, where you're looking for names, and we've got all this really sophisticated algorithms and machine learned stuff to try to rank alternatives to somebody who has a name that they aren't available. And we see that a lot of it varies regionally. If you're throwing a .de in front of somebody in Germany, they're more likely to buy it than a .us or .co or something. So the regionality is really important. I would say in the United States, .us isn't the second best yet. I would say that in the US, a lot more people lean towards like a co, or depending on their tech field, again, like that IO and AI and some of those. But that's certainly something I could see large companies on the search side would be able to shift that narrative a little bit if they continue to show it. So a lot of it is simply what alternatives are being shown in front of the customer.
Yeah. Well, another thing that's helped, I was going to say, .us this year is what are we on right now doing this broadcast? Zoom.us.
Mm-hmm. Yep.
And how many millions of people have seen the US for the first time all over the place this year. And as I started doing some stories for ADN, I was surprised how often I was coming across some of them. Like there's the third largest grocery chain in America is Aldi. They have 2,500 stores in America, and we have 4 of them going up on the main highway outside across a 10-mile stretch here. And they will pass, I forget the third chain to be number 3 this year. But they use .us. They put a flyer out every week. It's Aldi.us. If you go online, that's where they're at. And the biggest commercial real estate company in the world, who's based in Dallas, CBRE, which did 28 billion, not million, billion in money last year, revenue. They're in America on CBR.us. They're so big, they're all over the world, but they use the local TVs in their country. So recognition is the other thing that's a huge part of it. Usage begets more usage. So that's where US is, like I said, has come from behind. They got a very late start. So there's a big hill to get over. Definitely, no doubt about that. And I don't pitch .us to investors, really. The purpose of that site is more toward end users. And to tell you the truth, 99% of my sales in it are to end users. There's almost never another investor. But I can give you a ton of it. I've sold, this morning, I sold the 28th.us domain I've sold this year. So I'm averaging one almost every single week. I sold quick.us earlier this week for just a hair under $5,000.
Wow.
And so, there's some stuff happening, but that's still only what Paul's looking at, that's still barely a blip if you got a lot of $5,000 sales down there. So I think it's a long range thing, and I just would like to see America move up. But I think for most of this audience, unless you're planning to build a site, then it's probably not as relevant to you.
Yeah. Well, I guess, Paul, get back to the big gorilla. I mean, .com, I mean, it's still like the biggest around, but like how much bigger is it than the rest? Like is the growth still, is the growth of .com relative to the others still going at the same pace, or are the others catching up a bit?
That's kind of data that I don't know if I have. I would say that the growth of not com is likely a little faster than the growth of com. Just simply because of you've got so much speculation in all the alt-G and TLDs and some of these other things, whereas the comms are harder to come by. So it is one of those things where newly registered .coms are going to slow down because the supply is diminishing every day, which is great for this industry, for the people who hold the good .coms, because all of a sudden that means that the desirability of a good .com just goes up as supply dwindles. So, as a registrar, our opportunity is to put as many alternatives in front of people as possible. And again, I think those alternatives are going to be, do you go for the quality aftermarket.com, or do you go for a longer, maybe with characters and dashes, alternate that's available to register.com, or do you go with a good whatever else, a country code with whatever your region is in, or whatever the hot country codes are for the day. So it's really an interesting dynamic to try to get the best name in front of customers. And honestly, for me, and I'll always lean on this, the best option is quality. You don't want to ask a customer to start a venture on a really hard to type domain. And that's a truism that is going to remain that way for the rest of our time, is that the easier it is to pronounce, the easier it is to type, just the better your business is going to be on top of it. So we always like to focus on the quality, and we're doing some things on the find side, a lot of experimentation on domain search side to make sure that we're putting the right quality in front of them, which includes aftermarket for sure.
Yeah. There is some data on that. Of course, VeriSign puts out a quarterly domain name industry brief where they actually don't break, they try not to break out the .com and the .net separately. They say it's cumulative, but all you got to do is go back to previous reports and you can dig in, you can separate them out. And so what you see, what I've seen for several years now, is .com's growing on a year-over-year basis in total registrations, seems to be running about 3 or 4% annual. Whereas the .net has been stagnant it's probably been going on 3 or 4 years now, where it's stuck at like 13 million and just like sitting there. And then the CCTLDs have had some really good growth, and then they'll slow down sometimes. And it's kind of more like a sine wave, the way that's going. And they also break out, they cover everything, even though there's the .com registry, but they do the CCTLDs, they'll take the cumulative data. And on those, it's more like, it shoots way up on the new TLDs. And then they had a massive lot that weren't renewed, millions weren't renewed. So it went down here. And then it had another thing, something triggers something else. And so that's going like this. So it's really hard to get a handle on it from that standpoint. And of course, on the new GTLDs, you've got 1,000 different options. So they're just taking those cumulatively. So I think in that group, you've got a handful of winners and a lot that haven't won, which interestingly is what was predicted, I think, by most of the veterans when they came out with 1,000 extensions. A lot of the old timers said, well, what's going to happen is like what happens in any other business. You're going to see some winners in there, and you're going to see a lot of losers too. And I think that's what we've seen. From an investor standpoint, one reason I didn't go toward new GTLDs is I went through the first ones, the infos and the biz, and they never gained any traction on the aftermarket. But the biggest problem for me, if you're an investor, the stability of your annual renewal price is really important. And that's been a great thing about .com. You get, not only is it the greatest TLD, but it doesn't change much. It's going to go up here next month and under their contract. But I mean, it's like $9 or something. So still, it's really a bargain. In the new GTLDs, you get a lot of them will run specials only for the first year. So they'd be $5 or $6, but the next year they're 25. And that's fine. If you're an end user, you're not going to feel that at all, and that's who they're targeting, which is a smart thing to do. But if you're the investor to sit there and hold, you're going to get eaten alive by those renewals over a period of time. There are some exceptions. I know .club is a stable price point. They stick it around $8 or so wholesale, and a couple of others. But that's one aspect of it where, to me, it's two totally different markets there.
Yeah, I think .club is another one that GoDaddy has recently acquired.
Yeah, we're kind of in that space now.
Yeah, apparently, yeah. Yeah, but yeah, with the .com going up, I think some of us are a little not so concerned in 4 days or 5 days from now, whatever it is, when the next price increase goes up. But I think it's a longer term projection, right? At 7% plus 7% plus 7%, then a 2 years break, and then 4 more times. Now we're looking at maybe, thankfully some of us are members of GoDaddy Discount Club, and there's some other registrars out there who provide good pricing as well. So it's still what I think is relatively affordable, but it's the upward progression that kind of just I think for some people it's like, well, we gotta redo the math in our portfolios a little bit sometimes, maybe.
Yeah, but if you look at, it's all about the ROI, right? What's important for us, and then you think of domain investing, and of course I see it on kind of the management side. If the sales are there, if the revenue on the top end are there, and there's still enough to pay for the renewals of the rest of the portfolio, and it's just, you have to ask, okay, it does hurt when VeriSign goes up, X% every year, sure, and that will impact some portfolios now. But looking at it, has the overall market, has the aftermarket gone up that 7% to make it to where that it's not quite so painful to continue to renew these? And I think it has. I think, with, especially again, as we talked about the dynamics of the COVID influence, the aftermarket as a whole has grown higher than, say, the 7% .com price increase. So I think a lot of people in our field that are holding large portfolios, if they take a good look at it, it does suck that profits are going to take a hit, but overall business health has been going up enough to offset that a little bit. So we'll see. People who have bad names and kind of were on the fence about letting them go or not, it's just a nudge in the right direction. Probably what should have been done a couple of years prior with those names, right? So Shed, I know, GoDaddy, we own over 1 million names now with the NameFind portfolio. That's kind of part of my world too. And yeah, we're looking at it. We're looking at what names do we shed before the increase and try to figure that stuff out. And it's no different than anyone else who owns portfolios.
Well, yeah, although most of us don't have 1 million domains.
I mean, the scale is different, but the problem is the same.
Well, you have to have, if you're measuring it in Excel, you need to have less than, I think, 1,040,000 or something like that. As long as you fit in an Excel spreadsheet, I guess you're okay. I don't know.
Sure.
But yeah, no, that so those data, it's interesting. But yeah, I didn't realize you guys had 1 million domains there though. So I guess when you say things are healthy, you're talking about like both on the side of like retail and of NameFind as well. Do you track those numbers as well, or?
Oh yeah, yeah. I mean, certainly, NameFind is an interesting case for us. It gives us a lot of flexibility. One, as a public company, a lot of the public registrars have portfolios, right? That just kind of give them flexibility. But the good news for me is, as the business owner for this group, I get to see what changes we can make that can then be now broadcast or what can we do to say, okay, we changed pricing here, thus we're going to do, we'll let you guys know this works well. That's kind of where I want to take this whole NameFind is. Let's use it as a learning tool for the betterment of the entire industry. Of course, I'm in it to make the money. It's my job is to sell for as much as I can for GoDaddy. So don't take it as I'm being altruistic necessarily. But certainly what you should expect to see, and that we just hired finally we have like a dedicated manager for NameFind. You guys may have.
That job looked really interesting.
It should be hilarious. I went through a bunch of interviews, a lot of like fantastic stalwart type industry folks that I think were interested, because again, it's a 1 million domain portfolio to play with. And we ended up going internal with a lady who's just absolutely fantastic with numbers, and we hired her because of her experience doing experiments and testing things out. And that's really, so the focus now is going to be, let's do experiments across the pricing tiers, across the types of domain names, the valuation versus asking price. And what I'll be doing is I've asked her this year to start writing articles for our blog, and I'll be posting them to Twitter or whatever, whenever we get them written. But I want to be able to say, we took all of our names in tier 9. Let's say tier 9 is our $5,000 to $15,000 bucket, for instance. We took all of our names, raised the price by 30%. Here's what we saw. We then lowered them by 30%. Here's what we saw. That's kind of education stuff that we're really going to be focusing on for next year, because it's not enough, I think, as a big industry player, just sit back and have the information, which we've kind of done for a long time. I want to start pushing this to go forward and say, okay, here are the results of experiments we've done. It's not just a NameFind. It's going to be, we're going to have articles actually written in the next couple of months on parking, things we've done on the parking landers, results from putting the bin lander out there. And we actually have, like, for instance, just so you guys know the scale of how small changes on my side of the world can work. We did, so we had our bin landers, right? Which is basically, if you can kind of visualize, I should have an example up, I don't, I'm sorry. But it's a page. On the left side, you've got GoDaddy contact information. On the right side, you've got a little lever on the domain name and a button that says buy it now. Easy enough. It's very, very simple. we did an experiment where we flipped the buy now button to the left side of the page and put all the contact information to the right. It's just like the dumbest changes, right? The buy now button click, the click-through rate went up 33%. So just phenomenal type of just from that. So these are the things that we're focusing on. And nobody knows this because, well, we haven't published. So this is what I'm going to try to do is create this culture of, as our product managers, which we have an army of like really fantastic product managers. As you guys are doing things, I want them to write GoDaddy blog articles. So what you guys are going to see, hopefully as the industry, it won't just be me and Joe Styler that are like the faces of the community to the world. I want my product managers, I want some of my sales guys to really get up and start to make themselves known, because these guys have been all on the back end for a long time. And I think they can add a lot of value to the industry. So if you think of, kind of what we're going to bring over the next year or so, I would say expect to see a lot more players, a lot more people that maybe weren't as prominent, but are hugely important to your business, make themselves known a little bit more with articles on what they're doing and how they process things to help you run your businesses.
Yeah, well, most of you know me here from hosting the domain socials, but also I know you caught the Last Names Con. I actually did a presentation on domainer math and portfolio math with a spreadsheet there and all that stuff. So you gotta get me her contact info. We're gonna I'll do a show with her, and I don't know who it is, but we'll just get into the grids of the spreadsheets and talk numbers. I saw Ron kind of shaking his head there. He's working so hard trying to connect all the dots in the industry, like why are certain sales going up and down, this and that. And it's like, well, no, it's just because now there's more left-handed people coming on than right-handed, and it's like, I don't know. Ron, please grace us with something interesting stat that actually makes sense, because and it's true though. Sometimes we overlook those tiny things, but
absolutely,
yeah.
I'm stunned by that. Yeah, you wouldn't think of it, but of course in English we read left to right, so it makes sense. And maybe something as you're going across a page catches your attention, you don't get all the way over there. The whole concept of buy it now, though, if you want some interesting stats from my own usage, I came up, and when all the domain guys, virtually all of them, think you should not set a price, make an offer, because otherwise you're going to leave a bunch of money on the table. So I thought, I just took that as gospel. Okay, I don't know, maybe 3 or 4 years ago, some of the platforms that started looking at their data and were using buy it now started saying more and more that if you switch to buy it now, we're seeing like up to triple the number of conversions or sales. So even then I'm thinking, well, and of course they have an incentive, they want to do more sales, so they want you to put that price there, and I'm still going to leave a lot of money on the table. So I really was recalcitrant to try it, but then we get into the pandemic, and I'm thinking, I was worried early in the start of the pandemic if money would dry up and it would really kill sales. So I'm thinking, maybe I should be proactive here and try this. And so a couple of things happened. One was GoDaddy buying Uniregistry, where Frank Schilling is an old friend. So when he started his registry, I moved most of my domains over there. So they were sitting there when GoDaddy bought Uniregistry. And one thing that did is put my names on the Uniregistry market all into GoDaddy's registration path, which is unbelievable how many eyeballs see it. But to take advantage of that, you have to set a buy it now price. So I said, okay, I'm going to do it. So I went through, and most of the stuff I have is not worth more than 5,000. I've only got a handful that are probably like 5-figure domains. So, and I started looking at all these sales we reported, and I said, this is pretty much a known quantity, what certain kinds of names do if you're down at that level. So I went through them, said, I know what sales I've had all these years. I'm just going to price them in this range. Where will I be happy? What's the commission going to be? And I priced them all. And I think it was October of 2020, where I had them all live all of a sudden. And I swear, immediately I started getting sales hits coming in like I could not believe. They for me, they more than doubled, like overnight, the number of sales. And the other beauty of it is that no one makes an offer. How many domain guys do you hear always complain about they get a $50 offer on a $10,000 or $5,000, because there's no concept with most buyers, what they want. And then when they get 10,000 thrown at them, they just walk away. But it doesn't happen if you have a reasonable buy it now. And I think 2 cases that I've had anyone say, contact me off the page and say, would you take like less for that? And that is stunning. But when you think about it, these are my core customers. And I'm not talking about guys, if you've got 6-figure domains, you have a different group of core customers than mine, which are small to medium-sized businesses. But they go into Office Depot and they want to buy a desk. And you imagine the guy saying, well, what's your offer on that desk? That's not how they don't do business that way. It's like being in Tijuana or something. So you put these names in front of small businesses and if you got a reasonable price on it, and they just as soon get the name because, I ran small businesses, brick and mortar ones, and my hands were full all the time. I would rather pay the money, go forward with my project and get on with it and not get bogged down on that. So I'm just a huge believer now. I've been a convert and I would never go back. Now, if on those names that I have that are worth more, I will keep those at make offer because for one thing, if they're really good quality, the market is changing. It'd be almost like the real estate market where our home values are going like this. And that's happening with the best.com domains too. But I definitely urge someone to give that a try on your lower tier domains. And Paul has mentioned that I guess you rolled out entirely. This was part of an entirely new lander, wasn't it, Paul? Where you emphasized the buy it now?
Yeah, the bin lander was completely new from us, and actually was a demand from the community for a number of years before we. I'm not going to say suggestion either. It was not a suggestion. It was a demand. It's been going. The results have been fantastic. Of course, for domain owners like yourselves. And what you describe as your pricing strategy is actually pretty close to what we do on NameFind, where we have our appraisal algorithm that we spend a lot of time and money on it and like quite a bit. But at the end of the day, as trying to sell things, we break our portfolio, the NameFind portfolio, down. I think it's 13 or so different pricing tiers. And the first 2 tiers, the high value names, we don't even put buy now prices on because there's just too much of an emotional, okay, we need to check who you are. We need to make sure this is going to the right spot. Let's talk about a price. And then it gets a lot more into the lines of, let us help you understand how you can use this name than just a strict kind of back market negotiation. So the best domains, we still say, sure, make an offer, start the conversation, start the negotiation. But it's those ones, the bread and butter type, $5,000, $2,500, whatever the price may be, get those priced, get them in the network, get them spread out across all the domain registrars that Afternic serves, and you should do well if they're good names.
Yeah, I use that term all the time too, bread and butter, like just those mid 4 figures and just, and stuff that, should I say publicly where I got them goes out? No, don't people know my multiples maybe too much? I do share on the social all the time, but yeah, I mean, it's that burn and churn. If you get that middle tier, people, I see people going, oh, you got to invest in the top ones. And yeah, I mean, obviously there's so much demand on those, but they cost a lot to get into that market too. Whereas, in the expiry auctions, you can get some decent stuff for decent prices. And if you know what you're looking for and what to look for and what's selling, it's you can do pretty well there. I've had domains for quite some time, but I started domaining about 5 years ago, and that's my bread and butter. I was scouring all the closeouts and lower priced auctions. When I was doing the lists every day, I was doing the auction lists and closeout lists at NameCult every day up until about a year ago. And yes, it might come back one day. I'm still on break for those of you guys who are there unofficially, but yeah, just trolling those lists and going a few hours a night. There's stuff in there, right? I mean, it's incredible how much stuff is still available to be, plundered or just mined, I guess is probably the better word. And yeah, I do well. And Ron, it sounds like you're doing pretty well with like I know some of them are .us's, but I'm sure you must be selling some .coms too, or
yeah, .com, .org, .us have been my 3, and they're all consistent. So yeah, I was looking this morning before I came on. We're 8 months into this year. I had a good year in 2020 because the pandemic was driving business then, but then I made that big change in October. So I looked where I'm at in 21 after 8 months, I've done 25% more revenue than I did the entire year last year. And I've got 4 months still to run. So looking at the pace that I'm at, I'll probably end up, I'll probably be in the year 40% probably above the last year over year. And I've never had a year over year gain like that. We've seen ups and downs, like the China boom was a great year. That was like 2015 or 16,
around there,
where the buyers in China were buying everything that wasn't nailed down. I sold a lot of .com stuff during that at really full retail prices pretty much and in quantity. So that was a pretty amazing thing to live through. And but this is the first thing since that boom that I've seen anything comparable at all. I do think this one may have longer legs than the China one did. Everyone thought that the way that one was going, that, you know, they say trees don't grow to the sky, that, you know, sooner or later that the government was going to step in or something was going to cool that off, which it did. But in this one, a lot of people have posited that the pandemic pushed forward people's online plans by 3 to 5 years faster than it would have happened. And I think it will still go at that pace. The point that Paul made earlier about people going into business for themselves, it's so easy to do now. Even when I started DNJournal as a magazine, if you wanted to do a print magazine, you were looking at about a $1 million investment in the distribution and the printing and everything that was involved. And starting an online magazine, you need a domain name for about $10. And back then, the hosting only had to be about $10 before it had a lot of visitors. And you ramp it up and there's no cost. The internet is such a wonderful democratizing thing for people who want to be in business for themselves. So I really think, I don't know, you know, prices get a little frothy sometimes. I see people complaining about the expiring list that you look at, that a lot of them think the prices are already out of hand there. So when you look at stuff and it's just like consistently just so high and happens so fast, usually that recedes a little bit. But I really think we're going to have another couple of years at least of strength here, if not longer, because everything points to the internet. I got pushed in that direction 20 years ago, and now so many other people in mainstream businesses are getting pushed there. You just have to do it.
Yeah. Yeah, actually, you brought something up with the change. Remind me. I'm curious, Paul. How's the velocity or volume of closeout domains? Has it changed since the new pricing?
Yeah, it actually did what we wanted. Where you've got it slowed down that first day. Yeah. The whole point of the closeout price test was to get people to kind of stop waiting until right at the end of the auction, and that very second we were essentially getting DDoSed by people wanting to hit right at the time that goes to the $11 closeout. So by raising the price there, it really becomes a different algorithm now for folks, where you're saying, okay, is $50 is that price worth not putting a bid on it and exposing this domain to all the other bidders? Yeah. And will it go higher than that? It becomes a lot of. What we wanted to do is we wanted to spread out the curve of, instead we had this major spike of purchases on day one that declined until you got to the $5 day, which you saw another spike. And it slowed down our systems. It was just not ideal for us. So by using the pricing dynamics, we were able to smooth it out. And smoothing out is exactly where we kind of want it to be, where people say, okay, now I have a real decision on the 50 to 40 or where the pricing schemes are to get there. And more people are now bidding on the $12 name, understanding they're not going to get it for $11. So that kicks up the interest on the bidding there.
That was the big question I was wondering, is that more people are bidding, and I apologizing for abusing my refresh button on GoDaddy prior to the price changes.
You weren't the only one, man. You weren't the only one.
Yeah, I was. Those closeouts, but I did quite well with those. So, and I didn't have any access behind the scenes or API stuff, but still that refresh button. I got some good domains, and I have to say I've done well with them. So I can't be too angry, I guess.
It's fascinating to me how many good names are really, if you think of the expiry and the drop, you had snap names, drop catch and such into it as well. But the wholesale market, the quality of names coming through is pretty astounding. I look through every day and kind of see, and Yeah, I participate on Snap Names auctions because I can't participate in GoDaddy. So I look at the Snap Names. I see their stuff come through all the time, and they're really good, like bread and butter 2-word type domains. They're selling good prices, $2,000 to $3,000. I got a couple today, and then through GoDaddy, we saw. And I'll tell you what they are if you need. But on GoDaddy,
I think we all want to know. But yeah, finish your statement.
Yeah, let's say. But anyway, we saw like .co. I talked about .co earlier. We opened up .co as one of those that we are accepting expired inventory from our partners now for .co and .io. And Ray just wrote an article yesterday about all these .co's that came through, and you've got like Kate.co sold for $8,400. And it's a one word, but it's a first name .co dropped. And you
Kate
get
Buckley
so much.
in the house. I don't know if Kate Buckley's here. She can tell us if it was her or not.
I'm not sure if Kate bought it or not. I did not. I didn't know I look. I typically don't do that. So.
Yeah. But actually, that's how when I had domains for a long time. But my introduction to becoming a domainer and making the decision was I had a lot of domains that I was like going to build out one day. Whenever I figured out, I always say this, whenever I figure out how to make 30-hour long days, that's when I'll start building my websites, right? It's just, you always say you're going to do it and you don't. And then, so 5 years ago, almost to the day, probably, there was a whole slew of .co's coming through GoDaddy expirations because it was like the 40 days or whatever it is after the anniversary of the .co being made available to the general population. So every year at the anniversary, there's a bunch of those peak names that people don't renew or they forget or the business closes or heaven forbid the person passes away, but there's like a spike, and that drew my attention. And I was always looking in the aftermarket every now and then. I'd buy a few domains here or there, but then I saw that and I'm like, okay, if I start buying all these, the ones I want to get, I gotta, instead of holding them, I gotta be prepared to start reselling them. And that's when I started listening to the old domain Sherpas and log on the forums, and the rest is history. But yeah, so I don't want to take time away from you guys. You guys are my guests, so I won't ramble on too much. But oh wait, you got to tell us those names.
Oh shit. Okay. Yeah. I'm throwing it in the chat, so I'll tell you this.
Okay, in the chat, it can be secret. Actually, you can
No.
Okay.
I can talk about it. It's fine. So like I'm out on the dance.com, but something as good as the dance. I mean, there was a song. It's fantastic brandable name, and it's got what 3 hours left over at Snap. It's at $40,000. I think that's a fantastic name. It's just priced a little.
How much is it?
It's at $38.85 is the current.
Okay, yeah.
But some of them I do like onlinelife.com, oceanclub.com. These are names in the wholesale market that are dropping every day. 2-word, make sense together type of names. And I think that it just shows that the opportunities for investors are there, because you can't. I don't think anybody could look at Online Life. Yeah, it's a $2,000 worth of day left. I can't think anybody would look at that and say, "Wow, that's not going to be worth 5 figures to the right buyer." 6 figures if you're really good and you get somebody that's trying to like a Second Life type.
Oh, Paul, you're teasing us with that data behind the scenes. That's
not my name. This is Snap Names. This is not a GoDaddy thing.
So to me, I would have been 6 figures. It's a great domain. Into the 5 figures, I would agree. 6 figures. Well, you know what?
You think? Look at Second Life. Online Life is a hell of a lot better name than Second Life is.
Yeah, and actually, you know what? If we go back to Ron's list all the time, I think he would probably say those names. I guess they're hitting those 6 figures now, right? Like I know the one that's top of my head. We talked about Kate before. She had Green Street for 100, I think it was, and then since then there's been a couple of them even higher than that. I mean, maybe that's probably we still have a couple of this, but
6 figures for a solid 2-word.com is not an anomaly.
Yeah.
None of us should be surprised with 2 words that make sense together and mean something and are easy to say, easy to remember. Those are 6-figure sales. I mean, we shouldn't be surprised about that in the industry anymore.
Yeah. Ron, you seen that? I guess more and more. Those 2-word.coms there.
Yeah, yeah, absolutely. I think Morgan Lennon even wrote about that, had become his specialty a few months ago in .coms. He's out there searching actively for the 2-word.coms. The biggest problem is the vast majority you used to see would make no sense whatsoever.
Yeah.
But the funny thing is, even two that don't make any sense together, people have taken those and branded them, and they've turned into big companies too. So particularly if they take a color and something, whatever it may be.
Yeah.
But yeah, it's out there, and that's kind of been the beauty of this thing from the day it started back in the mid 90s. There have always been opportunities there. The original guys were totally ridiculed for spending their money on them. No one understood what they were. And those are the guys that are multi-millionaires now. And people ask the same question every year. Is there any opportunity out there anymore? And there is every year. It's in niches, I think, more because so many people have gotten into it. Big companies, big money have gotten into it, but there's always a niche that you can find. One piece of advice that people gave back then that still holds true is mine a niche that you know about. For example, if you work in a specific industry and you're coming into this, there are words and terms in your industry that that are meaningful that people outside that industry don't know. So I register a lot of media names for that reason, even maybe a little bit more esoteric ones, maybe in newspapers, magazines, other than, the key things. So, if you just settle on something like that and do some research on it, it's almost hard not to find something that you can make some money on.
Yeah, I mean, that's my two words. As Paul said, that's bread and butter, I call them. And it's just like, you get a certain sell-through rate and you get a certain multiple, and it's just, my portfolio isn't enough for me to say I know what to make every month, but it's at the point where I know in the year I'll in this range. And this year I've found that the prices have gone up a bit. Opposed to a lot of people, I think their volume has gone up. For myself, my volume hasn't changed too much, but the prices I'm getting for some of my domains has, stuff I would have probably targeted at 3K and 5K now, and that's doesn't sound like a big difference, but it is.
Well, that's where we're seeing it in the pricing for sure. Paul, you undoubtedly noticed with the .cos, for example, we had a month or so back, like a bunch of them come in there where those used to be 5 and 10. There were some that sold, but I think we had 4 on the chart that were between $50,000 and like $80,000 for .cos. And there was a couple of AIs on that chart too, that numbers that I haven't seen before that we started seeing this summer. So it's like every category is moving up a rung up the ladder.
Yeah, and I think that, the reason I brought up .co and brought it up several times is because that's what I'm seeing on the sales side is that .co is itself becoming a really viable alternative on the retail side. And so investors that have put their money in .cos are now seeing good returns, and it makes a lot of sense. So I run my personal email off of a .me, and I still get people asking me, it's like .me, what? It's like some people don't quite get that, but .co, I think it rolls off the tongue. It makes more sense. You're going to lose some to .com, sure. But I think it's a lot more usable than a lot of the CCTLDs are.
So you should get your family email on .us then.
I have a .us, but I haven't thought about the whole .us aspect of it.
Well, it's one of the I think a lot of people started out with that one more than the country code for a while now. We'll see what happens, but we're getting kind of along, but I think we got a couple more minutes left. There was a couple of questions I think I saw scrolling the chat, but one, I think Paul, a couple of people were really curious about some specific Afternic stuff. What's the latest with that?
So Afternic, we're sort of launching kind of regionally right now. I think in most of the world, it's actually open. The beta is open for everybody. There's a banner at the top of Afternic when you log in that allows you to go over to kind of the beta view. It's not functional, it's functional. What is there? It's not feature complete, we'll say. So what we'll be doing over the next X months and into the next several years is really just taking Afternic and putting up a complete new backend, complete new front end, complete new management experience on that. And so hopefully it'll be a lot easier to do things in bulk price changes. And we've got some really cool stuff I saw just the other day in a product demo, where if you want to do a percentage of price changes, update all my prices by 20% or whatever, we'll be able to enable some of those features. So we're really trying to look forward to not just replacing what we used to do, but make it look better. I'm actually wanting to put new functionality to make it easier to do everything. And then of course, if your names are Afternic and your names are listed Afternic and they're registered at GoDaddy, then it'll be a lot more tight integration between the GoDaddy Portfolio Manager, which we're doing a complete rehaul on that as well. So you'll see a lot more interface, like what we had at Registry. If you guys are familiar with how the marketplace integrated with the Portfolio Manager at Uni, the whole reason we went out and acquired Uni was because I liked the interface. I liked how they brought everything together. So we've got those product managers that are coming in and trying to put that same polish on the GoDaddy products. And these are things that they've been engineering for a few months now, and will be Q4, Q1 type releases for us. You'll see some interesting stuff come out.
Okay, good to know. And actually, speaking of Uni, is that eventually going to be folded completely into GoDaddy, or is that you guys keeping it separate for a while? Or
it'll be a little bit. We want to make sure that we're feature complete, feature compatible, okay. So that if you've got something that you use at Uni and you love it, that we don't want to lose it going into GoDaddy. There are a few features that where at Uni we decided we aren't going to port over. I think we've closed those. But for the most part, once we get complete feature compatibility and parity on the GoDaddy portfolio side, we'll start transitioning some more customers over. We've already started transitioning customers over that are easy cases, have 1 or 2 domain names, and we've moved them over to GoDaddy, and it's gone well. So yeah, what you'll see over the next year or so is accounts will start transitioning to GoDaddy accounts, and then we'll eventually shut down Uni as a brand because everything will be within GoDaddy.
Yeah, it's funny because when I started, when I really got serious about domaining about 5 years ago, Frank Schilling, the former owner of Registry,
familiar with him,
yeah, he was he was one of the regulars on Domain Sherpa, which when I was walking my dog all these kilometers, I'd be listening in, and from such a guy who's had such a success in domains, I just never understood the name Registry. Being a registrar, and a word that's like a little bit doesn't quite flow off the tongue, and it's just, I don't know, it's I didn't get it, because all his other stuff was brilliant. All the information you shared on there was awesome, but yeah, so I was just curious about that, because I know a lot of people on the socials have kind of wondered, they like Registry, and they're like, well, what's good, is it ever going to be switched in? So I think it's good that you're not rushing it, right? That's probably the best answer that you could give. It's eventually you want them together, which makes it simpler for everybody, but not until you're ready. And that's probably, the best thing we could hear.
Yeah, again, the reason we acquired it is that I liked the experience. So to force customers to use a GoDaddy experience that isn't ready, that isn't comparable, it doesn't make a whole hell of a lot of sense.
Yeah, Brad's saying, how do you spell registry? You just spelled it, Brad, in the chat. Yeah. So, Ron, is there any other, we're getting near the end of our time, but is there any other sort of important metrics or data that you think the world needs to know about?
I don't think, other than, what we're putting out in the biweekly reports, pretty much all there. We cover every extension, where there's a chart specifically for all extensions together. And there's one on there for the CCTLDs and another one for the non.com GTLDs. So whatever your interest is, there's a top 20 for each one. And beyond the charts, though, we do all the other sales that are reported above a particular figure. If people want to report sales to us, they can do that too. We will report sales that are 2,000 and up on .com. And that kind of arbitrary minimum was set because just to keep the report manageable, otherwise it would be insanely large, and it's already just crazy large. And other than .com, anything 1,000 and up. But if you're not a well-known platform that we've dealt with for years, we need verification of the price paid. So all you have to do there is send us a screenshot of the financial service that you use that showed the amount paid for it. And then we can list that. So we get a lot of independently reported sales every week, as long as they're verified. That I think adds interest to the whole thing. So that's there. And
so if people I have to admit that I'm guilty too. And I think one of the reasons why I don't report sales sometimes is because I just figure, it's not going to make the top 20. Doesn't matter, right? But then I realize, well, $5,000 sale, it might make the top 20 for one, but even beyond that, it helps you, I guess, get things in order, or?
Well, it also helps the reporter if they have a business site they're selling from, and a lot of people do, even if it's a link to their portfolio on another site. So if you're reporting you got a $5,000 sale to report, I try to credit everyone who reports. So I'll put a link in to your site if I've got a verified sale from you, and a link on DNJournal. We have a couple of million visitors every year that come through there, and it's a high page rank. So that's going to help bring your site, a lot of more newer sites, up in the rankings at Google as well. So it's advantageous to everyone. We have more information to share with the audience, regardless of what the size is, and then we try to help the people who help us report as well.
Yeah, cool. Yeah, that's. I mean, we're getting near the end here, and I cannot tell you how much the industry appreciates the work you do in giving us all this data. And Paul, thank you for the top 20s now. I know that was probably actually a struggle more often than people would probably assume. So
it's been difficult to get the approval to do these things, but certainly we've got it now with the caveats of, it's in the rears a few months, but getting data into the industry is certainly a big part of it.
As you guys know, like, I'm a huge spreadsheet nerd, and it's just, all that data and stats, to me, it's crucial, and it helps me make decisions and stuff like that. Before we go, Roman is almost begging us, and I'll actually ask both of you, because it is, I guess it is probably like the potential future, whatever it is. What are your thoughts on .io? Is it for real? Is it?
Can I take this one first? Ron, I know it was to you, but like this gives me an opportunity to hop on a soapbox I've been wanting to hop on for a while. So I'm going to apologize in advance. Yes, of course, IO is real. I mean, IO is being looked at as the TLD of choice of a certain community. NFTs are coming out. You'll see OpenSea is out. I don't participate in the OpenSea NFTs. I know a lot of our domain listeners do. It's been huge on Twitter's. Autograph.io came out as an NFT for sports cards, and that is backed by Tom Brady and Derek Jeter, and Saka, and massive names are into Autograph.io as an NFT marketplace. So what I see is that yes, IOs are coming out, and they're very, very high usage for the high profile ones. I'm not sure there's going to be a massive use case for call the longer two words or some of those .ios, but I do believe that there is a real market because the NFT industry and the crypto industry in general has gone that route. And this is the step up I need to get on my soapbox a little bit about NFTs, is that I know it's a hot topic in the industry, and I've been trying to find ways to describe how I feel about NFTs. I think this is as good an opportunity as possible, in that I have never really considered domain names as art. Domain names, buying and selling, they're implements. And I'll give you my analogy being, I'm not from Iowa, but I'll play the Midwest guy as well as I can. A domain name is your combine. It's a crappy domain name is like trying to plow your field with a John Deere tractor, right? Or a little like lawnmower. You can do it. It's just going to take you a lot of time. You're going to leave a lot of money on the table because you won't be able to get through your entire field with just this one thing. A really good name, a oneword.com. It's your large combine. It's industrial. It's worth something to you. But at the end of the day, it is implemented. It's a tool. It's a way to get viewers, it's a way to get eyeballs to your company. It is the most important part of your business. An NFT is the equivalent to a Grant Wood painting. There is value in it, and it's likely going to be more expensive than the massive combine because of beauty. And people are seeing NFTs, and it's not just the art of the apes or the turtles or whatever the hell else they have. They see the value, the beauty of a new digital experience coming up. And you kind of like think about domain names. Ron, you mentioned earlier, the early millionaires in the domain industry were scoffed at because they saw something nobody else did. That's what is happening in NFT. But there is that distinction: is domains are not NFTs. Domains are, again, are an implement, a tool, utility that real businesses can build real income off of.
Yeah.
Whereas the NFTs, they're art.
Yeah.
They're something that people can invest in. They're a store of wealth. It's a little bit different.
I agree with you, although I always say the domains are magic because they're the perfect coming together of exactly that, of a utility and structure and like art and creativity of bringing words together, or bringing just a string of, you know, random characters together, right? But you are certainly right there too, though. Like they do serve a function, right? And a very important function to many businesses, and that's why many of them are worth what they are worth, and all the others are undervalued, right? So I mean, there's a lot more value, and I think as the digital economy goes up, it will be more and more obvious how important a good domain name is. But Roman, I didn't forget to give Ron a chance to answer your question about .ios, and then we'll briefly wrap up. We have a couple other people after this. So, Ron, .ios, are they legit? Not legit? Too legit to quit? Tell us. I don't know.
I think Paul really hit it right on the head. It doesn't make a lot of sense if you're just looking at the original meaning of .io, which is a country code for the British Indian Ocean territories, but an entire industry has adopted it, and now it's got that level of take up and recognition that just once it gets that ball rolling down the hill, you don't want to be in front of the ball. It's coming down really hard and fast. And I was talking about .cos, some of those reports that were 50 to 80. We've seen some of the .ios in six figures this year. Yeah. I don't know how sustainable. I do think Paul's right on that. What they really love the one word ones, which one word's big in everything right now. So I don't know, I've seen some that go out further, but I don't know how deep that pool is. But it's definitely, I mean, that of all of the repurposed CCTLDs, it's been an amazing success story. I remember DirectNic's parent company, DNC, was, I think, the first time I saw one used. They were using DNC.io. They had offices here in Tampa for a while, so I went down to their office and I noticed that. And I thought, well, that's kind of an odd one to be using, a British Indian Ocean territory on that. But it proved, I mean, they knew something I didn't know even that early on, that it had the input-output thing was going to resonate with that community, and it really took off. So yeah, so the only thing as an investor, it's kind of like what I was talking about on renewals on new GTLDs. It's an expensive domain, relatively speaking. I've seen them run at registrars $25 to $50. So if you're holding it year after year after year, you're going to want to have pretty good ones. Maybe be better off spending a little more upfront and trying to find something new that you're going to register, unless it's some emerging technology where you think something's going to happen there. But otherwise, Paul nailed both that and the NFT question. I think he was spot on that.
Yeah, before closing up, I just want to, obviously, this is not investing advice, whatever it is, but I do agree with Paul in that, and with Ron, both you mentioned it a bit in your answers, in that you need to be very careful on which ones you obtain, right? Just because we're seeing a lot of these big name sales doesn't necessarily mean there's a huge volume of them, and I think the one character trait most of them have is that they're short and sweet, and they have a brandable meaning to them. Like either they're, I mean, it doesn't necessarily need to be a tech word, but it needs to be something that's easily brandable, like, rabbit or carrot or, purple or whatever it is, something that's short and easy and sweet. And that's when I think these companies start to consider anything other than .com, right? I think those the two words, I think it's maybe some CTLDs, maybe, but for the most part, it's .coms, where, as Paul was saying before, and where I operate too, it's the bread and butter, right? But that bread and butter, it does not work in .ios or in .cos and all these other ones. And maybe there's two words that are like known terms, those probably work, and they actually do. I've sold one or two of them, so they do, and there are exceptions to the rule. But just want people to know that this is not a call to mad rush to go and register every .io that's the equivalent of something else that's sold in .com, because that's how you will drop out of this industry very quickly, because it's a pretty big challenge. So anyhow, now that I had that little asterisk out of the way, do you guys have any final words that you want to share with everybody?
I would say one thing for me, I'll back on the crypto, the NFT space. I think that they've grown so fast because how easy it is to transact, how easy to implement. I got a little chat thread going here with Anita in the group, but basically what I like about some of these marketplaces is how you pre-fund your balance and you can buy and sell, and it is absolutely immediate. The more the domain providers like GoDaddy and our partners across the way, the registrars and such can make it seamless as the NFTs are today, the better off we're all going to be. So that's certainly, I can, in the industry, we can take a lot of cues from other industries. I think that's a cue from the NFT industry. It's just how dead easy it is to transact.
Yeah, and they're also it's the hot thing right now, right? I mean, I one of the rules I was going to do from the start of this week, I was going to say anybody who says the word NFT or ape is going to have to put $5 into the charity pool. But the comparison wise, though, it is a legitimate comparison, and I think right now it is the hot thing, right? And the market at some point will get a little more saturated, and we'll see how the prices go. I know some people involved in a couple of these projects. Like I'm still not a crypto guy or anything like that. It really intrigues me, and there's some stuff that looks a lot of fun. But it's like, I think we'll take it back to what Paul said. Domains, there is value there because they can bring value to a company, right? The companies out there and individuals with startups and businesses or charities or whatever it is, they could take a domain name, use it, and leverage the power of that domain name to enhance their income, to enhance their business, to enhance their presence and visibility, and that's the beauty of domain names. So did you guys I'm not sure if you guys finished saying everything you had to say.
I would just thank you for the opportunity, Arif, and for taking this on. When I heard you were going to try to do this for 9 straight days, I said, oh no, Arif suffered a head injury. And, I wonder where I can reach him in the hospital. So to see you here, look at your face for now, you're healthy. You're taking this thing on. That's a lot of work, and a lot of people will benefit from it. And the 4 charities you've chosen, all very worthy causes. So thank you for the opportunity and for what you're doing today and over the next 8 days. It's going to be really cool.
Yeah, I've got a lot of positive feedback, and this is just the first one. And it's honestly, I want to thank both of you, because originally as you said, it was supposed to be just a couple of panels in between the last 2 socials, and then I started sending out the emails, people saying yes, people saying, well, I can do it, but not that day and this day. So I'm like, okay, I'll split them up, and then it started to fill out, and then Michael Cyger and Keith, they're doing a brandable course next week, so I wanted to get them a couple of slots before. So I was like, I'll do Thursday. So it went from 8 days to 9 days, and it all these things kind of came together, and I'm really grateful to everybody who got on board, but specifically the 2 of you, because it kind of, you guys helped me break the ice, and I was like, still running around doing all kinds of things, and you guys were like fantastic. I really appreciate it. Paul, I don't know if you have any final words that you want to, words of wisdom. I mean, I was actually, before you do that, I'm gonna say I'm really happy we had this conversation, because I'm gonna take a look at your portfolio. It seems like we've got the same sort of bread and butter in there. But I'll give you a final word if you have anything else you want to mention.
Nothing else here. I'm just glad somebody else is doing this. The separation in the industry is being felt, right? It's not separation from physical. We're missing in-person meetings. I miss going to conferences, and it's just great. Now I was just give my staff meeting talking about, we've got this week. We've got an ICA members meetup coming up in September. We've got names coming on. These things are coming online over the next month or so, and just getting us all back talking to each other again. It's misconnections and all these things. I really value all these ideas and just the hallway conversations. I want to get back to that. The way we replicate it, I suppose, if you guys have ideas or things that you want to pitch to me, I'm open. Just shoot them to me. I'm just Paul at GoDaddy, so it's pretty easy email to remember. Hit me up at Paul E. Nix on Twitter. I don't know who the hell Paul Nix on Twitter is, but it ain't me. So throw the E in the middle. But I think those are the things. I try to be open to the industry because I love it. And so if you guys want to contact me, just do. I miss interactions.
Yeah, well, I mean, so again, thanks to really honestly to both of you. It really was, you made it easy for me to get this thing started. And I don't want to say I was nervous because I just didn't have time to be nervous, but you guys also helped ensure that the nervousness was still not there, so I really do appreciate it, you being here. I also much more appreciate what both of you do for this industry. Ron, I don't even have to say it. Everybody knows what you do. I think, DNJournal, guys, DNJournal.com, if for some miracle you haven't heard of it, it's been a wealth of information and data to this industry for many, many, many years, long before I became a domainer. And as those of you don't know, you're also involved with the ICA, right?
I'm on board, yes.
Yeah. So part of this week is to bring more awareness to the ICA. We're gonna have a special ICA day next week with the ICA crew on one panel and a legal dream team panel that's going to be. I'm gonna have fun with that one too. But so again, yeah. But thanks for being here and thanks for doing everything you do in this community. And we're gonna wrap this up. I'm gonna go on to the next show. It's all gonna be all in the same Zoom and everything. So those of you listening on Clubhouse as well, you don't have to switch rooms, but you're welcome to watch on YouTube. YouTube is starting to get some viewerships there as well. We're gonna have a pretty good week. It's looking like. So thanks again, guys. I'm gonna unfortunately have to boot you out, but you're welcome to attend. And all week we'll be here. So catch you later. You could say I could put you in the. Here we go. I'll put you down as a. Where are we here? I'll let you stay as a spectator. Oh, analyst. Here we go. So guys, bear with me again. Like this is a big work in progress. I'm trying to host and pay. I'm not going to say trying to pay attention to our lovely guests because actually they provide us with amazing knowledge. So now we're going to pull up where our next one's up. Here we go. You're going to all see a familiar face. First, where is he? Here he is. My faithful right-hand guy who's been extremely helpful over the last year. And specifically also this past week as well. And we're going to get a special guest up with us. Hey, Jonathan, I'll let you do the introduction while I
thank you.
I need to get a glass of water because if I lose my voice now, this week is going to be horrible. So I'll be back in 1 second.
Okay.
I'll let you introduce.
Yeah, thank you, Arif. Well, it's a delight and privilege to introduce somebody I've got a tremendous amount of respect for and have the privilege of knowing, Dr. Greg McNair from the Water School. And he's probably a familiar face to many of you who have, when the world was not upside down in pandemic mode. Greg is a dynamic gravitational pull at different conferences, and he shares his wisdom and inputs and support. And he, one of the neatest things about him is his benevolence, his charity. And I'm probably just doing a ham-fisted job of this, but it's an opportunity to talk a little bit about Water School and just how connected Water School has been as a means for domain investment community and all of the bounty that we have in our industry to be able to go kind of focus towards good purpose. So Greg, for those who don't have the privilege of knowing you, could you introduce yourself, talk a little bit about yourself, and then I think we want to dive right in and really focus, given we've got a narrow amount of time, on the charity, some of the things the charity does, and ways that people can help. So welcome, Greg.
Yeah, I also want to say welcome, Greg. Thank you for being here. Jonathan has told me many wonderful things about you and how interesting person you are. That would be great to have you on the panel. So I'll let you tell us about yourself and Water School.
Thanks, guys. I really just am a guy who's been so fortunate to be in the domain space. I have a diverse background, commercial background, not technical at all, but I've been blessed with great technical partners and managers and people that are able to at the forefront of monetization and is well known for especially the larger players in the space. My background is really one of entrepreneurial drive. I've been in something like 30 or 40 different industries in my life, some short term, but long term for me is 5 years, right? So, and as I get older, it's probably down to 3 years now, right? So I can only say that the industry that I've been in since 2005 has blessed me beyond belief, and it's part of the motivation that I have to be involved in philanthropy across the world, and in particular with the water school, which is focusing its activity in Uganda. Most of the industry players know that I've been involved in raising money. I've twisted arms at every conference I think that's ever been held to raise money for the kids in Africa. And the industry very graciously has adopted the charity that Richard Lau and myself have spearheaded within the domain space. And we've taken something like 100 people from the industry on trips to Uganda. A couple of those trips actually climbed Kilimanjaro, and I was fortunate to be one of the people that summited on one of those trips. But more to the point, we are changing lives in Africa by providing the access to clean water that most people in the rural areas in particular just simply don't have. Most of you will be aware of the WASH programs, that's sanitisation programs, but probably not aware of the fact that we have a proprietary method of decontaminating dirty water by putting it into a plastic bottle in the sun for 8 hours and letting the UV rays of the sun process that water to kill 99% of all pathogens. That was what excited me more than 10 years ago when I got involved with Water School. And we've taken it to something like 3 or 4 million rural homes now where this is practiced. And we have something like 300 volunteer workers in Africa. And the Water School today, through its implementing partner, they're all Ugandans, or at least all Africans. And the Water School Board based in Canada is simply directing the funds to the needs that the board of that organisation in Kampala are requesting. In other words, us white guys are not doing any of the actual work. It's all being done by locals in Africa, and they are doing an amazing job, from financial accountability to the reporting of the projects. We are absolutely astounded at the work ethic that they're displaying and the amazing results that we're getting on some of the traditional activities of the Water School.
Yeah, I mean, what last December when I did the charity auction, which many people I think watching will remember, it was a really fun event. But again, the goal was to raise funds to the 4 charities in question. We ended up beyond my wildest expectations. We reached 12,000, so it went 3,000 went to Water School. But it was it was really interesting for me because the reason I chose it was just because, you know, of the history with the industry, right? It was when I think NamesCon itself was founded when Richard and Jonathan, I think you mentioned Jody too, a few other people were involved with getting NamesCon started. I think the goal, if I'm not correct, was that it was to raise money for Water School, right? And it's getting a safe environment for people in other corners of the world is such an important thing. Like for me, my personal passion is third world education, but it's all about bringing stability, I think, to these other corners of the world, which, I mean, like it or not, it comes back to affect us, right? I mean, when people have a safe place and a healthy environment with, safe water and access to food and education, like they'll thrive, and the whole world grows from it. It's really, I'm personally appreciative to people like yourself and Richard who work to progress these sort of movements and institutions that actually help, right? It's like it's not like wishing this or talking about this. It's like, no, you're producing these things that actually make a difference, and it's these little seeds here and there, but it makes the world a better place. So thank you for that on behalf of the other 6 or 7 billion people on this planet, for one. But yeah, I think it's really something really important. Yeah, but when did you start with that? That was with
I was involved from about the second or third year of inception of Water School. Richard knew the founder, and he actually invited me to donate. And I said, I don't donate to things that I don't inspect. So I went there and was blown away with the need and the ability to make a difference with a small amount of money. And so I got involved, and I got on the board, and Richard came on board as well, and he was supporting strongly right from the beginning. And so we were able to put together a tremendous board in Vancouver, in Canada, and we've been able to see this organisation go from strength to strength and diversify into a lot of other fields, meeting needs just as great as water in some respects.
Yeah. So Greg, I think it's just an amazing charity. And yes, it was the catalyst for NamesCon back when we founded it. But the Water Night and some of the other activities have been there throughout a longer history within the domain industry as a way for, this is a great industry. It really does give much bounty, lots of success, and people are there's a lot of wealth that gets generated within this business, and the opportunity to do social good with some of that bounty and being able to direct that in a place that has, there's all kinds of charities that you can send money off to. But what always excited me about Water School was exactly the pragmatic, inspected, sort of, I would say audited, because with Greg and his background in business, he's had the opportunity to operate big businesses, look at spreadsheets, have huge P&Ls. To have the somebody with his business acumen and background experience take a look at a charity, it makes me feel better about donating money and donating time and donating energy and mind space and passion towards a cause that is going to go in a good direction. Somebody's actually checked the teeth on the horse here, and they've inspected it and see that it's doing something good. And what's been really delightful to see in our industry is how generous people have been. I see in the chat, yes, I donated my hair. One of the neat things was a social activity called Water Night, and we did something where folks would meet a certain donation threshold, and then folks would get their head shaved live in the event. I think we were emulating, Greg has made bald fashionable. And so it was an opportunity to kind of emulate Greg's style. But unfortunately, I came home and my children did not recognize me, and they were scared when they saw me with short hair. That and coordinating NamesCon, walking around at the
Tropicana Hotel, I was probably about 100 pounds larger, and folks thought I was security when they'd come up to me after that, because I looked like a Breaking Bad character. But my question was, will we continue to see water nights and the water charities with as much of a robust footprint in the industry? It's my hope we do, not just through the Domain Social, but what are some other places that people can participate and learn more about Water School and what you're doing?
Well, there's been a solid base of support created within the industry, and those people, particularly those that have been and visited the on-site field operations, they are regular donors, and that has been a great satisfaction to the board. We have expanded the work considerably. We've been able to attract quite a lot of external funding from foundations that are helping us expand the work beyond the traditional water school work. And one of the things very close to my heart is 3 years ago, we tried to tackle the problem of teenage pregnancy. And in that culture, when particularly in the rural areas, when a girl is pregnant for whatever reason, and it's usually not promiscuity, whenever she's pregnant, her life is just about finished.
Yeah.
She's out of school, the parents reject her, the community and by large reject her. Even in some cases, the churches reject them. And these girls and their babies have really a double whammy in terms of overcoming the appalling conditions of third world nations. And this problem doesn't just exist in Uganda, it exists right through Africa and the rest of the world, in India, and we know the story. Yeah. But we're trying to make a difference in Uganda, and Empowered Girls Initiative is a business unit, if you like, of Water School, and we are funding that to the tune where we now have 500 girls, pregnant mothers, teenagers, scheduled to come into programs over the next 5 years that are being put back into school. Their babies are being looked after. The girls in the main are going into a boarding school situation, so they're not distracted by their child. And we help the grandmothers or whoever's looking after the child. It's a very complex and individually tailored program to help girls get a second chance at life. And I'm very proud to be able to say that I was right at the beginning of pushing this, and we now have 4 major centres that are working in this, and we're going to expand it further. And our implementing partner in Uganda is very excited about the changes that are taking place, even in the first 2 pilot years of this program. The first 70 girls in the first year, 72 girls, 69 graduated. We expanded the program now to include vocational studies for the girl who wants to be a hairdresser or wants to do something that's not necessarily in an academic stream. We're able to send them to what we would call tech schools to learn other skills. And we've been amazed, even through the pandemic, whilst the schools have been closed, we've been able to help these girls get into income earning occupations, which has just been amazing. So
it'll change the world. That changes the world, right? When they have their own opportunities, when you help them get opportunities, it just these people they don't necessarily want help. They just need a little boost, and they want to be able to do their own thing. And that's the thing, is that providing that education in that environment, you should be proud of what you do.
Yeah.
'Cause it makes a difference.
It really is an amazing
Yeah.
little charity that we're hoping to grow. We're trying to attract the big donors for it, and we think that we can do that.
Yeah. So,
But we're building bores now in areas of drought areas of Uganda. Not that there's
Wow.
many, but where there's low rainfall, but we've been putting in rainwater tanks in areas to try and harvest the water where they have to walk a long way to get clean water. And we've been working with the health department to declare a lot more of the regions of Uganda open defecation free. So people are being taught how to build safe, reliable pit latrines, and we've got something like 60 or 70 communities now that are declared open defecation free, which is not what we started off doing, but it's all part of the health concept.
Yeah.
In the last couple of months, we've taken a bigger bite. There's an island in Lake Victoria off the coast of Uganda, part of Uganda, that has never had electricity. And it's not likely to have electricity according to government plans for a long time to come. And we have been part of a proposal to put together a solar-powered mini-grid backed up with a diesel generator for when there's maintenance going on, to serve the 12,000 people on this island that have never had anything but batteries and little,
That's amazing.
generators. And so we're well advanced in the feasibility. We've got full government support, and we are raising money at the higher end of the scale, obviously, for something like that, for the mini-grid system on the island of Busia.
Yeah, I think I want to share with the audience here, like anybody can help. Like it's waterschool.org for anybody waterschool.org for anybody who wants to contribute or help out in any way. Like obviously this week the general fund will be divvied up between a few of the charities you guys see at the top of the page at the Domainer Week. But you don't hesitate to reach out to some of these amazing charities. Actually, I won't say more than that, but I mean, Greg was the first person when I sent out an email to some members of the ICA. He was the first person to reach back out to me and say he was pledging out of his own pocket to both Water School and ICA. And I really want to thank you quite a bit for that. I think what you're doing is it's powerful, helping the world, but it's also you guys are coming up with creative solutions, which is great as well. I do have to bring this a little bit back to domains, though, in that the email you sent me came from a very interesting domain email address, and I have to before letting you go, because we have other people scheduled for, pretty much right now, but I have to know what is your favorite domain that you have.
Oh, I couldn't wait to buy PTL, not because it is the acronym for Premium Traffic Limited, but as a committed Christian, everybody knows what Praise the Lord is about, and certainly our business is one that respects the blessings that we receive on a daily basis. The blessings not just in business, but of life and family and all that makes up with a successful life.
Yeah, well, it's I do want to have another conversation at some point, because Jonathan said in parallel to all these great things you're doing, you have a lot of interesting sort of stories, and you do have a history in the industry as well, which I'm sorry we didn't get to touch on. But I really appreciate your time, and I more than that appreciate the energy and effort you put into these. Into your I'm losing my voice already. Philanthropy, and in making the world a better place. World is kind of going a little bit wonky and stuff like that, and it's good knowing there's people like you out there. You know, and for everybody else watching, it's like, don't, you know, even if it's $5 you want to donate to water school, whatever it is, you know, do whatever you can, because there are people in the corners of the world that really do need our help. So you know,
I think it's worth saying, Arif, that you know, people are skeptical about giving, and I'm the greatest skeptic. You know, I like to see bang for my buck, and every cent that is donated to water school goes to the field. There's no administration cost that is taken from the general donations. There's well, basically, I can say that Richard and I pick up all the administration costs, so that anything is given goes. And that's, for me, is just about endorsing my belief that this organisation is worth every cent that anybody's prepared to give it, and that money will go to the cause, not to the administration.
yeah, actually, Richard's here. I do have
Right
the next
as it
one up,
ends.
but I will give you a couple words, Richard, for logo.com. I have, I promised the Joshes that they got them some time, and we have the other panel that was supposed to start, but
Well, and we started
can't-
late too.
I can't. Yeah, I think they'll understand it. How are you doing, Richard?
Great.
Good.
Thanks for pulling me in. Glad to be here. Sorry for I was tied up at the bank, so I just managed to get here now.
If you're tied to the bank to give a donation to water school, I will forgive you. I will forgive you. I heard he mentioned that you guys do all the admin sort of out of pocket, which means that like all the money that is raised goes right to that. To me, those kinds of charities, it's very humbling to see people who give so generously, not just in terms of financial contributions, but also in terms of energy. I mean, I'm humbled. People hear it all week saying, "Oh, you're doing such a great job." It's not. It's what I'm doing this week is nothing compared to the differences that people like you make in this world. So, like, genuinely, thank you very much for that.
Yeah, Scott Harrison from Charity Water does the same model. There's other charities that do the same model where you get people, generally members of the board, and some other people that will underwrite everything, so that when you're going and appealing for donations, that everything goes to the field. And we've been doing this now, gosh, I want to say over 10 years.
Yeah.
And it's tough. It's tough, especially at the beginning, to write those checks to cover the admin. But if you don't step up and do that, then donors can be skeptical. And Greg used that word, and gosh, I used to be a couch donor, and skeptical was a nice way of putting it. Sometimes I'd be on bitter when I look at the financials closely on some of these charities.
Yeah.
And so it was the right thing to do for running water school. When I joined the board, even before I joined the board, I was pushing for it. When I joined the board, I was like, there's no way we're going to have donors covering admin costs. And, our board shrank. Our board shrank from 12 people to 7. And I'm like, don't let the door hit you on the way out. If you're not willing to give of your time, your money, and or your network, what are you doing here? So, we run water school as a board with a lot of passion, and we put our money and our time, and we walk the walk. And I'm really glad to have guys like yourself and Jonathan, shaved his head. I think we all have at some point. But to have everyone in the domain community come alongside, so it's been really amazing.
And we should do a water shave with Arif.
I don't know.
Look at those locks.
I've had one haircut. I'll just bring the next guys in while I speak. But I've had one haircut since COVID started. It was last summer when things were starting to open up, and the guy who cut my hair had his mask like around under his nose. I'm like, Yeah, maybe I'll take a little bit of break before going back and another haircut. It's like it's like maybe not. I don't know. But guys, yeah, Rich, I'm sorry for cutting you off. I'm really behind schedule, but I really wanted to thank both of you for all the work you do, and I'm glad we can help out in some way. We'll hopefully by the end of the week we'll raise some funds to hand over.
Go to waterschool.com and you'll see the annual reports there online. You can see exactly
waterschool.com or waterschool.org?
Both.
Okay. Good. Nice. Good.
We're domainers first.
Yeah, I know. I was saying it's the right answer in this room. That's for sure. But yeah. So,
all right, guys, thank you for supporting the cause and for inviting us to share it today.
Greg, I really appreciate your time. I really appreciate you coming and talking about it. I really appreciate both of you the work you do for the betterment of the world.
Thanks.
So,
thank you. And we'll pass the stage to Josh and Josh.
Yeah. All right.
Thank you,
again,
Richard.
guys.
Thank you, Greg.
Thanks, guys.
Thank you.
All right, now we got the Joshes. Where I was going to put the other guys back in the room. There we go. Goodbye. Thanks again. Change role attendee. And now we have Josh Cube, Josh Squared, Josh. Well, not Cube. Josh Squared, I think would be the right one, right? Josh is here from DNWE, who you all know have they started a nice exclusive domain investor platform for those of you like to get in the wholesale space. Yeah, I'll bounce you out too, Jonathan. Yeah, I like to keep your pretty face as long as possible. There we go. So basically, throughout the week, I'm any company who sort of contributes to the industry like the Joshes do. You're welcome to come on. You see on the schedule, there's a little break schedules. If those 50 minutes are there for anybody in the community, especially members of the ICA or again, people who give back. I know both Joshes had done a previous panel with me on the main panel last year, which is part of the impetus of this sort of week. And both of who share a ton of knowledge in this industry. So I don't want to eat up any more time, guys. I know we're running behind schedule. So I'm going to let you guys take over and just tell us a little bit about DNWE and what it is you guys are doing there.
Cool. Hey guys. Yeah, thanks Sarah for having us on. So
my pleasure.
Yeah, DNWE is basically a wholesale domain marketplace for domain investors. It's private. It's for domain investors to be able to transact amongst each other in a private enclosed environment at the wholesale level. So it's basically for liquidity purposes, for people that need to liquidate domain names, get capital back, sometimes make a bit of profit, and for other investors on the buy side to be able to pick up good names at the wholesale level in a different venue other than a domain auction. So launched back in, I think Josh launched it back in early 2020. I came on about a month later, and yeah, we've just been trying to grow it ever since.
Yep, that's pretty much it. That is the truth. I mean, most people know about us by now, but we're still kind of plodding along, adding various features. Lee, who most people know, helps us out on the dev side. He's great, and we still have a bunch of sales every day, and from a lot of the time, there's a lot of people that have success and sell on there every day, and there's some people that buy and sell once a month, once every couple months, honestly, whenever they feel like it. And that's really, I think that's why the subscription model works, is because you don't really need to use it all the time. The more you use it, the more bang for your buck you get. But to be honest, if you use it a couple times in a year, should pay for itself in most cases. And obviously we've got a partnership with Dan, and as everyone knows, Dan do an incredible job in the industry with their tools. They're basically who we use for our escrow service. We exclusively use them, and you can sell a domain and get paid in one day. thanks to them, thanks to their smooth process. So yeah, we're still plodding along. We're still adding features, and yeah, I'm kind of interested to see what happens as the market shifts. I feel like we've been in a very bullish retail market for a good amount of time, which means that a lot of successful domain investors are not really looking to liquidate their inventory very often, unless they're flippers, which there are a lot of flippers out there, and flipping is good. It's a good business model. But I think most people realize that if you can hold your domains long term and sell it for full retail, you're going to be better off. And while the market is hot like that, that means that less people are willing to sell at wholesale prices. So I'm interested to see how our platform performs when maybe sales slow down. Hopefully that never happens. We're all here for lots and lots of retail sales, but things happen. There are ebbs and flows even within portfolios. So you might be having a slow couple of months, and that's when using the platform can be useful. So.
Yeah, you guys have made some changes recently too, and you're also allowing people to sell. It used to be you started $300, I think was the max. Now you've kind of made it a little bit more open. How have those changes sort of panned out? Are you guys seeing a lot more action?
Yeah, definitely. So the minimum sale that we used to allow was $299, and then now it's $99, and that's really the reason why it's $99 is because that's really the minimum amount that Dan will process, and they're our exclusive payment processor. But we also feel like that's a pretty decent level. Since we lowered it, we've actually seen a bigger influx of investors come in. We've seen more action because a lot of the flipping and a lot of liquidation happens in that lower level, in the $99, $199 level. So I think it's been good because it just allows more of the industry to be able to participate on our platform. So it's overall been a positive. And if in the future, if there's a way where we can even have it be lower, maybe $50 or $25, whatever it is, we'll definitely do it. So we'll see. Yeah, overall it's been pretty positive though.
I think I'm kind of curious, integration with Dan, is that making things a lot easier for your clients, or how has that changed things?
I think it makes it easier for the clients on both the buy side, the sell side, and it certainly makes it a lot easier for us as well. I think it's easier all around. I think most people that have used Dan realize that they offer probably the best escrow service in terms of automation. I think that there are other good escrow services out there. And I would say that for larger transactions, you probably still want to use the likes of escrow.com. But for what we're doing, Dan works perfectly. And it's certainly a lot easier, being able to quickly and safely sell names for as low as $99 through a platform like that is really like quite unique still. There's not a lot of other places that you can do that. So yeah, I overall, I think that it's all pretty positive for me. I look at it like this. I mean, it's obviously not like a massive business for Josh or I, but I think that it is a nice little tool for domain investors to have in their artillery. And I think that as of now, we're happy with that. And I think that the more domain investors that get into the industry, the more people will want to use that tool. Obviously, I think that widespread adoption using it when buying and selling only benefits but the domain industry, because we don't take any commission. There's nowhere else. There's no other place like that apart from Name Pros. And I don't think that selling on Name Pros in the forums matches up well with the world that we're living in today. I think that we're beyond that, and I think that selling on DNWE is a step in the right direction.
Yeah, and I also want to say that I think there's two pretty significant distinctions with you and them. And the first one is I think you guys very respectfully you don't mention you keep everything pretty much private. Like here we could say Mike Cyger, who's coming on shortly. He said earlier on 2 hours ago he liquidated a domain for 4 figures, so which is awesome. Yeah, so congrats, Mike, on that. Maybe we'll talk about that later. But yeah, so like you guys keep it private, the information private. I can never really hear you guys talk about sales. You'll say general stuff, so maybe I can get a couple of things on that. But the other thing I appreciate is your the way you set it up to be pretty much exclusive to domain investors and not and trying to shield it from potential end users. That might to you guys might not sound like a big deal, but to me as a domain investor, thank you guys for that, because it's easy for some people targeting the wholesale industry to eventually say, no, we want more sales, we're going to go and get the end users and stuff like that, and sell them end users domains for wholesale. But I know you guys kind of screen the people who come in, and I'm guessing there might be one or two whatever that get in here and there, but I as somebody who values my domains and like selling them for a lot more than wholesale, I think that's an important statement to make. Was that deliberate or?
Sure, that's deliberate. I mean, last week, maybe 2 weeks ago, we had a 3letter.com sell on the platform. Just under $30,000. That was commission free, so the seller will get the full amount that he listed it for. He didn't have to put it on Cedo or GoDaddy or on his landing page, where an end user could have perhaps scooped it up for a price that is not healthy for the industry, because as we all know, 3letter.coms are worth more than $30,000 to end users. So it's a win-win-win. The buyer goes to the buyer gets to buy a domain that isn't going to get reported in name bio, because unlike expired auctions, we don't report the sales, so it's not going to be plastered all over there. When they have it for sale for $250,000, and someone comes along and says, "Well, I just saw that you paid $30,000 for this domain." Now they're not going to know that because it's private. So there are a lot of advantages that I don't think you don't get anywhere else.
Yeah. So here in the Q&A, Brad's asking, like, I guess explaining how it works. Like, how would you get started, and what do you expect when you start? Like, yeah, I guess finish off with that. I guess just give a general overview of somebody who maybe never checked you out before. They get there, what they
Like a platform standpoint, like using the platform. I mean, it's fairly simple. You go through a sign up process like any other kind of site. We review the application, so we look at the information that was provided. Surface level stuff, just to make sure that we're getting the right kind of people using the platform. We approve it within, typically could be really quick, or it could be within a day or two. And then you have to pay I think we've got a 3-day trial still. So you get to trial the platform for 3 days. And there's either an annual membership fee of $149 or a monthly membership fee of $14.99. And with the monthly one, you can cancel anytime. Annual one, $149, takes you through 12 months of the year. And you can start using it right away. You can start buying, you can start selling. If you're not a member of the platform, you can't buy. So that's something that a lot of people are like, whoa, why can't I just buy on there? I don't want to sell. It's a private platform for members only. It's basically a membership subscription platform. So if you're not a member, you can't buy, you can't get the deals that are on there, and you can't sell.
Yeah, but you can become a member, especially if you're a domain investor. I don't want to scare anybody here. It's not exclusive. Well, if you're watching this, chances are, give them a shot. They'll probably accept you, I'm guessing. Is that a safe bet, Josh? Or
we'll almost certainly accept you, as long as your email address isn't something like, Ian McDonald at IBM.com, then we'll probably accept you. Yeah.
Yeah, you send them some of the requests. What kind of domains do you want to buy? Yeah, like IBM. So
as long as your name doesn't end in like Mark Monitor or something like that.
Yeah.
Or one of their fake sites.
Yeah, exactly.
We don't know about, right? Yeah. Do your research, guys, when you get incoming offers. That's all I'm saying. Check those contact informations at the bottom of the pages. But
Brad asked there, how do you price the names to start? Like, we don't price them at all anymore at the beginning. So to save everyone time and so that sales and everything can happen quicker, you price your names. And if we like the price of it, we'll tag it and we'll say, oh, we like that price, and we'll highlight it, and we'll make it more obvious to buyers, and we consider that our curation method. So if we see a good deal, we'll highlight it, we'll put it in bold, and we'll consider it curated. And then what will also happen if we do that is an email will go out to people that have notifications set up for curated names, saying, hey, this was just listed for sale. It doesn't mean that you can't sell non-curated names. Like, you can put a name on there, price it, and then a buyer can see that domain before we see it. That happens all the time now. Obviously, there's a lot of buyers on there that are constantly looking for deals. So if they see it before we see it, we're probably not going to get a chance to curate it. And those type of names sell quickly all the time.
all right. Well, it's good to see you guys having some success. And I know it probably is. Your success in the industry, I think, is probably a little bit more than that. I know both of you do quite well as domainers as well. But it's cool. It's cool to see you guys working on a little side project to help everybody else sort of liquidate and I guess, yeah, not liquidate, but have more liquid sort of element to their I guess domain portfolio, their tools of making revenue. People who want to shake things up a bit, change their portfolio around a bit, sell a few, buy a few more. Yeah, and what Mike said, he's 2 hours ago, he sold one for mid 4 figures. So yeah, it's great. Any final notes on DNWE before I pull up the other guys?
If anyone has any questions, they can reach out. Happy to answer them.
Yeah, absolutely. You can always email us at support@dnwe.com or hit Josh or I up on Twitter. Either way.
Yeah, Josh or Josh. All right, well, I'll pull up the other guys. So Josh S. I'm trying to still figure out a way of getting you on later on in the week. We're going to coordinate there. So hopefully we'll be the last we see this week. And Josh Reason is going to stay with us now. We're going to get Jason on and Mr. Michael Cyger as well. Here we go. And we'll be seeing you hopefully sooner or later, Josh.
Absolutely. Thanks, Sarah. Appreciate it.
My pleasure, man. And thank you for for being involved in the industry. It's you're a voice there too, and not just for DNWE, but you share information and stuff like that, and that helps elevate everybody. So thanks for that. And on that note, I'll bring on a couple other guys who share share with the industry as well. Here we go. So we got. I feel silly doing this. Okay, Jason Sheppard, for most of who's a prominent person on the socials and in the industry as well, who started to work with Michael Cyger and as an instructor in DNAcademy as well. And Jason, he's kind of been my hero a little bit since he's kind of shared his information a bit. He for a while he had this very structured method of his portfolio of like, for the first few months he did this and that and there. So we're going to get into that, I think, at some point. And then Mr. Tand himself, you're missing the white mustache, Michael, but you have Michael Cyger here. And if you guys, I've said this a few times in the last few weeks, if you guys don't know who Michael Cyger is, just stop buying domains. Just stop it.
I don't think they need to go that far.
Mike Cyger, he was the host of Domain Sherpa when I first got on into the industry. And I had my little dog Steamy, who's thankfully very, very sleepy right now because I went for a big walk last night. He's letting me host this whole week. Hopefully, day one we're okay. But all those hours I walked my dog was just Michael Cyger and his guests in my ear, and I'm really grateful to all that information you shared. And since then, he's moved on from Domain Sherpa, but he's still working on DNAcademy, which coincidentally, as I said before, Jason Sheppard is an instructor on, and I think also coincidentally, I think Josh, did Josh take part in helping you with some of the original content or something like that? Seemed to me there was something there, or maybe not. Okay.
No, I think so.
Okay, I thought you consulted a bit. Okay, anyways, well, should have, but anyways.
I tried to get him.
I do a lot of chatting with Mike, but I can't take credit for any of that.
Okay, all right. But so he's working on DNAcademy right now. So for those of you who are interested in elevating your domain skills from top to bottom, DNAcademy is the only place I could tell you to go. He's got a very structured course, and it's over time he's adding more and more elements to it. So I think right now we have a really interesting panel here. I'll just go back to Josh, because Josh, I introduced him before as the DNWE, but Josh has graced us several times on the Domain Social, and especially when we went after hours, like after recording and stuff like that. There are times when he's quiet, but he's done very well in this industry. I think he's probably one of the people who knows what to do the most on a very basic level. I always listen to Josh and I go, I don't do that, Josh. I just hear every time I try buy a domain, in my head I'm like, Josh would tell me to do this, and he's right. And I go look for more research and whatever it is. You got to know what you're buying and stuff like that. So I'm really honored to have the three of you here with me. We're gonna try and start this week off with more of a baseline sort of discussion, but wherever it wanders, it wanders. I don't think it's still kind of a socialist. So we're gonna.
And if I can interject, RF, the thing that I love about a lot of people in the industry, especially Josh Reason and Jason Sheppard, who are on stage with me, is that one of the conceptions about domain name investing is that you needed to get in the 90s. The domains started coming out in mid 80s. You need to get out in the 90s to get all the good ones, or you needed to get in the early 2000s to get all the good ones after the .com bust. And it's not true. And we see that over and over again with people like Jason Sheppard entering the industry and Josh Reason entering the industry. There is opportunity every single day on the drops if you want to hustle and you want to learn and you want to put in the hours. And so, I think as I've been in the industry for a little bit over 10 years now. So I feel like I'm one of the old people in the industry. And I would just want to point out that there are motivated, intelligent people that are entering every single year. And these are two examples of that kind of people. And I know you have other people on the program for later this week. And so, I just wanted to interject that.
Yeah. So before we start, you guys have any initial advice on what to do with people starting this industry? What's the first thing they should think of?
Don't buy at first. I mean, don't figure it out after you've already bought 100 or 200 or 1,000 domains. I mean, most people kind of find their way into this, and if you're on this, this domain week and you're watching this, you probably are beyond that point. But yeah, if you're starting out and if you've got 20 domains, make sure that you get a handle on what is selling before you start buying more. And I mean, that's been said a million times and a million people have ignored it. So, and whether you are in a position where you can pay for DNAcademy and maybe even, the accelerator, that's great. But if you can't, the information is there in the Domain Sherpas going back for years. It's just Mike has taken that information and distilled it down and kept it updated, because if you watch a Domain Sherpa from 2012 or 2013, that information may not be accurate anymore. So in having DNAcademy, I don't want to turn this into an infomercial, but there's several routes that you can find the information that you need. It just depends on how much time and effort you're willing to spend. But the bottom line is do that, look at what sells, and, get a small portfolio and get a couple sales. And if you don't feel like you have to get the maximum price for your first domains. I mean, the first few domains I sold were low 3 figures. I was just ecstatic to somebody bought something that I had put out there for sale. And then that gave me the confidence and gave me the drive to want to, do it again. And so then I made a lot of mistakes, figured them out and got and righted the ship. But, the thing is just get some sales, don't go crazy, and, ask around on Twitter. There's a ton of information on Twitter. And if
and I'll tack on to that what Jason said. I'm on Clubhouse a lot, and I really like the fact that new people are coming to ask questions about domain names, and I want to try and help out wherever I can. I know, RF, you're on there a lot as well. And I would say, to Jason's point, you sort of need a hypothesis around what is going to sell and why it's going to sell. I recently saw a person come in who bought like over 100 domain names in a certain CCTLD that had emoji characters, and they dominated this emoji. And we've seen it with like people picking certain words and then picking every single city and putting it in front of the words. And they get really excited because they want to lock down that opportunity that they've discovered, in their mind before anybody else discovered it. And what I would recommend based on Jason's suggestion is buy the best 5 or 10 that you can, and then go try and sell them. Try and sell them to another investor, right? Take Jason's advice, and if you bought it for $8, try and sell it for $20 or $30 or $50 wholesale, right? That's generally where you're going to go from $8 to $30 or $50 wholesale, or go to an end user and try and sell it for $800, $500, $300 in that order of magnitude. If you're not seeing anybody taking up any of those, right? If the end users don't see the take up and the investors don't see that end users are going to take it up and they don't buy it from you, then it probably has no value. And so test your hypothesis. And there are people out there that will give you honest feedback. People on Clubhouse are on there on a regular basis. You just need to go and ask. And I will say, I'm going to kick it over to Josh Reason, because Josh, how many years have you been in the industry now? Would you say?
I have been in the industry since, I would say, really 2016. So, so 5 years.
5 years, maybe a little bit less. Josh is one of those people, Jason and Josh, they are quick on the uptake with respect to what domains sell in the market, and so what they want to buy. And Josh, when you were starting out, how did you look at, Jason said, test it out. I said, test your hypothesis. And I love the idea of like, buy a domain name, flip it for 2-figure profit. Then when you get that, flip one for 3-figure profit. Then when you get with that, go for 4-figure profit. Work your way up. We're not going to hit home runs right from day one. What was your success when you started investing in domain names, and how did you nail down the kinds of domain names that end users want to buy?
100%. That's a really good question. And sometimes I actually forget about it because today is really different than what it was even 18 months ago. I would say for the first 3 years, a lot of what I did was exactly what you just said, finding domain names and trying to flip them for 2-3x the price that I paid. And honestly, that for me lasted quite a long time because a lot of that process was a learning process. Was me realizing what had value and what didn't have value. The first couple of years, I probably only, sometimes I only had maybe one end user sale a month if I was lucky. Those, I was ecstatic to get a sale in, the $1,500 range or the $2,000 range. I remember those sales really, really well. I think from achieving those kind of sales, you start to notice a pattern, right? And you start to understand which ones are losers and which ones are winners. And then once you kind of start to get that experience, for me, that's when I started to saying, okay, now I can start digging in a little bit to the data. When I picked out this name, why did I pick it out? Why was it a loser? And how can I make sure that I avoid buying those type of names again? And then, the opposite for when I found domains that sold. It's like, okay, why was that a winner? How much did I pay for it? How much did I sell it for? And how can I continue to find more opportunities like that? For a lot of trial and error, it just continually got better and better. And it's, the thing about domain names is that it's a compounding effect, right? So the better you get, the quicker your portfolio, builds because you start to get more of those end user sales, and then you can start to reinvest. And, I went from maybe only having one sale a month to an end user to having, 5-6 sales a month to an end user within a year. And prior to that, it took me a lot longer. So I would say that it's one of those industries where there's a bit of a hockey stick moment. You're kind of going along, and then suddenly, boom, shoots up.
Yeah, I agree wholeheartedly with that. It was about 2 years in where the sales just all of a sudden started coming. And it's whether you call it a hockey stick like Josh just did. I was thinking snowball effect. Either one. Once you reach a critical mass with the number of domains in your portfolio, if you're building a portfolio that's on a little bit more of a volume type scenario, then you will reach a point where they'll start selling. Now, on the other side of the coin, if you're going to be an investor like Mike, the sell-through rate on the domains in his portfolio at a lower price is almost going to be 100%. But is that a price that Mike would take? Most certainly not in most cases. So, in a matter of that, it's just, you have to balance it out. But so the critical mass in Mike's portfolio comes from the quality of the names, not the quantity. Whereas in someone like mine, and I don't know specifics into Josh's portfolio, but mine is based on the quantity almost.
And what would you say if I'll go first, and then I'd like to hear Jason and Josh. How many domain names do you have, and when do you think you hit that critical velocity where things started taking off and you started seeing sales more regularly? And so, we have different strategies that we invest in domain names, right? So nobody has the exact same strategy, uses the exact same tactics. I think we all overlap with tactics. We're all looking for great deals, and we would probably all buy the same domain names. But I have a portfolio of about 50 domain names that I want to get down to 10. And I want just stellar single generic dictionary words on the left of the dot in .com. I play a little bit in the .io space, but that's where I focus. And my goal is to sell one great domain name a year. It's usually in the 6 figures. That's the space that I play in. Although I've had different strategies in the past, I've changed them over time, and that's what I do now. Let me kick it over to you, Jason. How many domain names do you have? And when did you see that sort of critical velocity take off with sales?
Well, right now I have about 8,000 under management. I have a partnership portfolio and a regular portfolio, but the total is around 8,000. And when it really started taking off was right around 2,000, 2,500, I think, is when the sales just kind of started rolling in to the point where it was regular enough to be like, okay, I can definitely see that there's a future in this, that there is a predictability to it when you reach a certain level. And that's the main thing is that, on a case-by-case basis, and this is something Arif really taught me, was every single domain has a discrete sell-through rate. It's just unknowable.
Yeah.
And so
exactly.
And so, but when you put together 1,000 or 2,000 or 5,000 of them, and they're of a certain quality, and you know that they were picked out using a certain method, then you get to a point where there's a predictability to the overall sell-through rate of those in bulk. And so a portfolio of 5,000 names, has a recurring revenue amount to it that is relatively predictable. There's variance, of course, but I felt that it really, I don't know if it was completely there at 2,500, but I could see that that's where it was going to be. And it was getting
awesome. Yeah, somewhere around 2,500. What about you, Josh?
Yeah, so a lot of people ask the question kind of also, I just want to touch on like how how do you get started in domains? Like, there's lots of different business models, right? I mean, Mike touched on the fact that his business model is different. So, but that's not the only different business model. There are at least 5 different business models from a domain investing standpoint, including brokerage, right? So there's no easy way to answer that question when it's super generic like that. For me, in terms of critical mass, I think that, like I said, the beginning, the first, I would say 2 years or so, is just a case of like figuring out what sells and what doesn't sell. And then once I felt confident in my ability to, make a profit in a year, maybe, net 50, 60 grand in a year from, flipping and understanding the market. At that point, it was when, for me personally, I then decided, okay, I understand what is a good domain now. I understand what's going to sell to end users. And at that point, I hit the drop lists, I hit the auctions, I hit private sales, I hit the bins at Cedo in the bargain bins every day, really hard, nonstop, for about a year. I would say about 12 months straight, every day, didn't miss a day, probably acquired on average, maybe 15 names a day. And I would say after about 7 or 8 months, that starts to accumulate, and you start to see those sales. And I don't think that you can reach that critical mass until you've had that period of just prolonged, just buying, which obviously is quite capital intensive. But the way that most people figure that out is, if they don't get sales that come quickly, is they have that ability to flip names. That's how I did it. They have that ability to flip names, or they have their full-time income, which is what I also had. I had a full-time job when I was getting started, and I was accumulating names. And I think those 2 components are really, really important, because you can't accumulate 15 names a day very easily without a decent sized bankroll. And you need to acquire a good sized portfolio in order to get some predictability if you're trying to go that model. If you're looking for like a model that's slightly different than that, maybe 500 mid-tier names, and you're looking for 1 sale a month, different story again. But again, it's going to be really capital intensive up front, so you're going to have to do something to supplement that. We can talk about ways that you can do that, but that's the short answer.
So did I do my math correctly that you have about 3,000 domain names, and it was around 3,000 that you started seeing more velocity in sales?
Exactly. That's exactly
Okay.
right.
Yeah,
Yep.
that 3,000 is where I am right now, and ironically where I've been for about a year, because since I stopped doing lists at Name Cult, I haven't been online at night going through the lists. I've been organizing the socials or whatever. I don't know my excuses, but I haven't been buying as much. But what's really interesting is that I know. Yeah, sorry, Josh.
No.
but
No excuses, Arif. Play like a champion. Come on.
But what's great though is that I see that my sales have been stable and growing pretty much in line with everybody else is saying, right? So it tells me that like the domains I sold wasn't just the cream of the crop and all the rest was garbage. It just means that, yeah, my portfolio has depth to it, and that it gives me a little bit of sort of reassurance that, I did right at the start. The domains I got, even at the beginning of my portfolio, if I took that just the first year out, as of today, or not as of today exactly, but I mean, as of now, like that part of my portfolio is net positive, right? So it's awesome. It's great. For me, to answer your question, it was probably around the same thing as the other guy said. It wasn't right away. Even at 1,000 domains, I say you don't have that. You don't really know that depth. And obviously when you're up to 1,000 domains, maybe a little bit more of them are the stuff that you maybe need to drop at the start. It's when you start, it's your portfolio's gonna be a little bit weaker, and as you get better and you buy better and better names for better and better prices, and it's just you get a certain regular routine. I'm not at the point at 3,000 domains where I can reliably say what I'll make per month. But as I said, I think earlier on and today, I'm at the point where I have a pretty good idea at the end of the year what it'll be. As Jason said, like there's randomness to it, right? I mean, if you have GoDaddy and you have name find 1 million domains, then you'll have stability, right? Or huge domains with their 6-7 million domains now, whatever it is, they'll be like, it'll be stable, right? Because they have a certain type and the averages are always there. But Jason, as you said, it's good to know what kind of the value of your domains are, but also what the theoretical sell-through rate is, right? Because the sell-through rate is just as important as how much you sell them for, because you need to pay for those domains that don't sell, right? It's easy to say, oh, I bought a domain for $20, I sold it for $4,000, so it's a 200 multiple, but it's not, because you also have to account for the 99 other domains you didn't sell, which cost you, let's say, more or less $1,000. So you're still doing well. It's just that it's not quite the same thing. And for some newer investors, their sell-through rate is lower, so the drag of the renewals is a lot heavier. And I think that's where a lot of people get lost in this industry. Is like, yeah, they get glamorized by the one or two sales or the headlines in the news. Oh, this so and so bought this domain for $200 and sold it for $20,000, whatever it is. But how many domains does that person have, right? Like there's some big players in this industry who share that data, but what's the overall data? So
yeah. And Chuck brought up some good questions in the Q&A area, some of which we just touched on. He acknowledged, what are the key points to think about when formulating a business model for domain investing? So because this is like how to do domain name investing, when starting out, everybody has a budget. So you sort of figure what is the most money that you're willing to lose to try and learn to invest in domain names, and then set that out. And that all depends on you, right? For you, $1,000 might be a lot. For somebody else, $1,000 is nothing. They go to Vegas and they put it down on one hand of the roulette wheel, or one spin of the roulette wheel. And so I think it depends on you. It also depends on whether you have a full-time job and you're just trying to take some of your money and move it over and try domain name investing because you really enjoy the hunt, that garage sale hunt and finding the gem and then holding on to it for long-term appreciation. Or if you get the rush out of like flipping domain names like Josh did when he started. So really a lot of things to consider in there. I think sort of I would say, what would you guys say is like sort of a good number to start, knowing that some people are going to waste a little bit of that money learning and then, figure out their stride and then start investing in those domain names to get enough sales, right? Because you can't say, well, if I tell you the answer, but you only put $100 in, that's not enough to buy anything that's actually going to sell in a reasonable time. And then you're just, it loses the excitement of domain investing. So what do you guys think? How much do you need in order to get going?
Go on, Jason. I need to think. I get the question so often from people that want to get into the domain industry. I think my answer may have changed a few times. So you go.
I can throw out an idea and then you guys can just throw rocks through it.
Okay.
So let's say that somebody has $10,000, right? That's a lot of money. I'm not saying that everybody needs $10,000. You waste $1,000 trying to figure stuff out. That leaves $9,000. If you acquire domain names on the drop for an average of $30, some of them are going to be lower. You're going to get them for like a back order, like a $10 back order. Some of them are going to be higher at $50 with a discounted drop catch. But let's say $30, that gives you 300 domain names. Assuming you know what you're doing, if you get a 2% sell-through rate, 300 times 0.02 is 6 domains a year. So you get an average of 1 domain sale every 2 months at an average price of say $2,000 to $3,000. Is that a good model or is that not exciting for you guys?
That would bore me to tears, and I would not be here today. If that's the route that I took. I need the action. So I would say that I would say you can acquire for $9,000. I could probably acquire 800 names that I feel like would have a good chance of selling. So would I say that's the absolute best strategy? Probably not. I would say that of $9,000, I would take 6 of it and look for. I would go through and put 200 names that were 2-word, right order, 12 to 16 characters or less names on my watch list at GoDaddy. And whatever made it to $5, I would then say, do I still like this 3 days, 5 days later? And if it was a yes, then I would buy it. I would do the same thing for the drops, and I would put in for discount drops, and I would put them in at a low price so that it's self-limiting, and then somebody like me or Josh will come in and probably add $1 or $2 above it and take it from you. But anything that gets through, you have to be careful with that, because that means that somebody wasn't willing to pay more for it and huge domains didn't want it. But I made a lot of money on names that I got on discount drops. So, and those are a flat, whatever you put in is what you pay. You don't pay another renewal on top of it like you do at GoDaddy. So a $5, closeout at GoDaddy is really like a $13 name, whereas a $10 discount drop at Dropcatch is a $10 name.
Yep.
And so I would say that if you took 6,000 of the remaining and did closeouts and discount drops, took 3,000 of it and looked for 6 names in the $500 range that you did your due diligence on, that you did all the things that Josh always says and that RF and I don't do, look up how many companies are using the word in their names, all those things that that tell you that it's got a good high degree of salability. I would do that for the 6 names you're going to buy for the 3,000.
Yeah.
Awesome. Thanks, Jason.
Yeah.
Now, Josh, you started flipping domain names before you started putting them in your own portfolio, which gave you a lot of cash to start.
Yeah. So, I mean, I think that my strategy in that regard would change slightly today if I had this whatever $10,000 to start. I think that previously I think I've advised a lot of people in the past to say look for some quality names, buy names in the $400, $500 range, and see what you can do from that. I wouldn't do that anymore, just because the market has changed to a point where I think that what you get for $500 to $1,000 isn't good enough to warrant paying that price, which is why I don't anymore. I can't remember the last time I paid that kind of price range for a domain at auction, because I feel that I can identify names with similar kind of sell-through rates at similar kind of price points in a discount drop.
Mm-hmm.
So what I would say today is I would go purely full back order and discount drops. I'd do a combination of the both. I would discount drop somewhere in the $11 to $15 range for names that I didn't want to pay $59. I can just tell all my secrets now, by the way, Jason, because I don't buy domains anymore. And I would 11 to $15 range, because at $10 there's you're gonna get outbid by Jason at 11, and then I would use the entirety of my budget on that, to be honest. Every single day I would search for domains through expireddomains.net. I would generally look for domains that are taken in more than 1 TLD. So I would probably literally just put a filter on and say only domains that are taken in 2 TLDs. And I would put them all for sale with buy it now prices on Dan and on Afternic and on Cedo if you can, somewhere under $5,000 for every single name, including the ones that you buy for $59 if you're able to get better ones on a full back order. And then at the same time, I would put them all up for sale at wholesale prices as well, with like a 5x margin. So the names that you purchase for, well, some of them 10x. If you purchase a name for $11, put it up on DNWE for $99. The ones that you purchase for $59, put them up on DNWE for $150, or anywhere else. I really don't care. Put them on Name Pros if you like. Some of them will sell. Some of them will sell just because we all have a different eye for domains that we like. Mm-hmm. It's just natural, right? Like names that you may not think are that great. I may just like see something from, because of my everyday life and, what I relate to, and say, hey, for $99, I really like that domain. But literally everyone else wouldn't like it for $11. That's, but when you put them all up for sale, and I think that if you had $10,000 and you accumulate, let's just say, I forget the math for a second. Let's just say 1,000 names. you will sell a bunch at wholesale for, a 5 to 10x return, and you will probably sell one a month, maybe one every 2 months if you're lucky, to an end user. I would do that. I would do that for sure. And I think, honestly, if you do that with any degree of efficiency whatsoever, I don't think you can lose. Generally don't think you can lose.
Yeah, and Josh and I disagreed a little bit on the 500, and I would say I kind of rethought my position. And what I would do is I would identify 10 names a day that I liked enough to bid higher than closeout for, and I would put a minimum bid in for it. And any of them that you got outbid at 6 minutes on, I would chip away I would bid up $5 at a time until you either are leading it or, set a threshold, obviously. But because if you get bid on it at 6 minutes, it's almost certainly Huge Domains or one of the bots. And you will not, you're unlikely to go broke paying one bid more than Huge Domains on most names. Because they've got a good model. So frequently I'll just chip away at the bid, and when it gets to the point where I know what their proxy is, then I'm like, all right, cool, I got a decision to make now. And if it goes over by $3, I'm like, all right, so I was willing to pay $3 more than Huge Domains. This is probably going to be a worthwhile purchase, and so it's not the end of the world. So if you're still unsure, then worst case you get it for 12 because nobody else bid on it. But if you have a lot of those, you need to start looking at yourself and say, all right, am I really picking the right names? But if you pick, if every one that you pick if somebody's bidding on it at the last minute, and then you make a couple bids and you determine, okay, yeah, it is one of the bots. It's probably Huge Domains. They identified it as a good name, and that gives you the confidence to say, hey, this company that is obviously doing this at one of the highest levels in the industry saw value in the same name that I saw. And so that kind of gives you some confidence that you're picking the right names.
Yeah, that's really important. I remember when I was really trolling the closeouts, it would be a similar story, right? It's I'd be looking for closeouts, and I knew all the ones I wanted I wouldn't get, but there would be a certain percentage that I wouldn't get, which you'd think is bad, but at the same time, it's a good sign that you're losing some. That means that other people want those domains, right? So in a sense, it was like, okay, yeah, I wasn't getting all of them, but I know the ones I'm looking for, I'm doing something right, because there are people trying to snatch them up. And with the closeouts back then, you win some, you lose some, and it's a numbers game, right? End of the day, if you targeted 10 and you ended up with 3, could be a good day. It's a.
How are the closeouts going now with the like $30 and $40, $50 like change?
Well,
are they people
we
buying them?
We just had Paul Nix on earlier on, and I actually asked him that question. And he said it had the desired intent in that the platform wasn't getting hammered anymore, and there was a few more people bidding at $12. He didn't specify how many more, but he said there was a noticeable difference, and obviously it works out for GoDaddy, right? Because it's more income and it's less stress on their system. For us, I think I know when I was buying it, the $11, that was it would change things on its head if I had to get $50, right? Because the math is completely different, right? You get a third or a quarter of the domains. So that's a good question. Jason, are you still?
My best domains, like from like a sales perspective, were $11 closeouts from last year, like by far. By far, those ones performed so well for me. It's crazy. Every time I got a sale, I went and checked it. It was $11 closeout.
You're welcome. No, but
so you asked about how it is now. So
yeah, I got a lot from your list. I did.
Right.
I'll give you some credit.
Yeah, fun. Jason, sorry, I cut you off.
Currently, I have a specific subset, which I'm not going to get into, of names that I look for, and I put them on that are going through expired auctions. That I'm not going to have no intention of bidding on them in expired auctions, but I will purchase at a closeout price on its way down. And I can tell you that very, very few names are getting purchased at 50, 40, and 30.
Wow.
Most names are, I'm not buying many. And most of the ones, now this is again, a very specific subset. Let's just say they're brandables and leave it at that. But as they drop down, they're not getting picked up. And so then most times, if there's one I really, really like, I might pay 30 for it. But most times I'll wait to 11. And a lot of times it gets to 11. I'm like, well, if nobody's, and I'm not sitting there waiting for it the minute it turns to 11, because even though theoretically it's at the 24 hours since, it's a predictable point, there's a delay, and I'm just not going to sit there and watch it. So, I've got a daily alarm. Not going to tell you what time, but go check the closeouts. And if it goes off now, I got to run.
Yeah.
And then I go and check the closeouts, and any that have dropped to the point which I'm willing to pay, I just check them off, hit buy, and then go from there. But I can tell you that I don't know. I can't speak to whether it's driving the $12 bids more. I can tell you that the thought process that GoDaddy's getting rich off of $50 closeout purchases or 30 or 40,
no,
that's not happening.
Yeah. But you do bring up an important point, right? It's like the one element of your domain investing that you have the most control on is how much you buy domains for, right? And you might say, oh, $30 one day, $11 the next day, whatever it is, you're selling them for $5,000. It's not about that. It's about you bought 100 domains at $30 versus $11, and you sell 1% a year at $4,000. All of a sudden, instead of making $3,000, you're making $1,000, right? Or in other cases, it's even worse. Sometimes the difference between a profit and a loss, even if you're selling domains. That's, I think, what a lot of people happens is that they'll sell a domain here or there. They go, oh, I sold a domain, but it's like, then it's just the purchase price for all the other ones are just so high that they can never make their whole thing back. But
frame it like this: the difference between $11 and $29 is 2 renewals.
Yeah. Yeah.
Two names you can renew, or 2 extra years you can keep that name.
Yeah. Or the way I see it, well, when you add the renewal part to it, so it's 11 becomes 20, and 30 becomes 40, so it's double. So you're basically you either need to sell all your domains for twice the price, or sell twice as many domains to just to get to the same level, right? So, and it's everywhere. Like, I mean, oftentimes I'll see people, they'll say, oh, I have this domain and this domain. Is it a good domain? And yeah, we're going to probably do a review here at some point, whatever it is. But like, if your domains are good or not isn't the only factor, right? Good domains, as I say all the time, good domains, it might be good domains, but they're not necessarily investable domains depending on what you buy them for. And that's critical, right? You have to know how much you're going to be able to sell them for, approximately what your sell-through rate is going to be. And those things are difficult to come up with when you start, right? Because when you have 100 domains and you don't sell one in a year, you might still have good domains and just be unlucky, right? And conversely, though, you might have terrible domains and just not know it. And even worse, you might get lucky and make one sale that was a one-off, and all the other ones are total garbage. So you think you're doing well, but you're actually not. That's why, I don't want to tell everybody go out and buy like 3,000 domains. That's not the takeaway here. Take it easy, take it slow, go take a good course, or go listen to the podcast or whatever it is. But yeah, I mean, be aware of what you buy. The price you buy it for is crucial.
Yeah.
And
good advice.
And one thing that I just kind of, as we've been talking here today, I realized was when I pivoted to doing domains as pretty much my primary focus when COVID hit, I panicked and started wholesaling a bunch of names and seeing the feedback on which ones sold. And a lot of times I would have a little bit of seller's regret, but it was seller's remorse, because I was like, oh, wow, somebody saw something. But at the same time, I was getting a little bit of income and offsetting stuff. And I was cutting my portfolio a great deal at the time. But so what Josh said is great. If you list your names simultaneously at wholesale as also at retail, then when you start getting confirmation of your names, as other investors are willing to pay a little more than what you paid, that's a sign. That's a sign that you're on the right track. There's other ways to get confirmation as well. If you specialize in brandable names, you can submit them to the brandable marketplaces. And if your submission approval rate is just terrible, then you need to work on your skills. Now if you're doing the brand bucket, that's going to cost you $1 a name, and that may, depending on what your model is and what your thoughts processes are about that, you may not want to do that. I have a lot of names at Brand Bucket. I consider the dollar to be worth it. Others may have a different opinion. And then if you can also submit it Squad Help without paying or paying $1. And I know you got some brandable marketplace sessions lined up here. So I would encourage people to check those out as well if you think this is something that you want to look at. But having confirmation of a certain number of your names getting purchased on the wholesale market, a certain number of them getting accepted at a brandable marketplace, those are, that's data that you're getting, that you're picking the right names. And I think that's important, because with a 1% to 2% at best, maybe a little better in a perfect world sell-through rate, owning a portfolio of names, you're not getting enough feedback on 98% of your names, because you're only seeing the small percentage that even the best domainers are selling in a year. So
yeah, very true. Very true. Yeah, it's all, I mean, well, I'm a spreadsheet guy, so it's the numbers to me, they're crucial. It's one thing when you're starting off, I guess there's more metrics to it than that. Like with Michael, when we're doing Academy, that's what you learn there, right? I mean, Mike, what attributes and metrics kind of make sense. And maybe you'll share that a bit right now, kind of things that what you tell people, what they need to, what are the first sort of attributes that people should look for or shy away from?
Well, I think right off the bat, people need to understand that there's 6 types of domain names. There's generics that you find in the dictionary. There's exact match, which have search volume and or CPC. There are brandable domain names that are made up like Home Depot or Google or Spotify. And then you have acronyms, or letters, you have numbers, and then you have numerics. And if you are specifying, if you're trying to specialize in one area like brandables because you want to submit them to Brand Bucket and Squad Help, you need to focus on those and master that skill before you move on to other ones, or just focus on that. And so you might get distracted trying to buy exact match domain names that are never going to be listed on Brand Bucket because they like brandables. They don't want exact match domain names. Unless it can be used as a brand as well. But generally speaking, that's what they're going for. So I would say, starting off understanding that there's different asset types and domain names is the big one. And then based on that type of domain name, you're going to look for certain metrics over others. If it is a generic in the dictionary, you'll want to see things like the number of TLDs that are registered, because then that shows who might want to upgrade from an inferior version of the domain name to the one that you own. Search volume and CPC are important for exact matches. Number of if you're looking at brandables, you'll want number of characters, number of syllables, number of words in there to be within a certain limit. Keith DeBoer talks about on brandableinsider.com all the time about how he likes to get 12 or less characters. It's generally going to be 2 words in the second level domain. So anyways, I don't want to go over all the characteristics. We help people understand that there are about 35 characteristics to a domain name, and understanding what can increase and decrease the value of that type of domain name is an important step in the journey to being a good investor, in my opinion.
Yeah, I agree.
One thing that we didn't, Josh touched on, but in order to, he said that he was spending a lot of time. RF's mentioned how much time he spent making his lists from which he drew his own part. He was doing that as a side. I think you weren't submitting also the ones you were buying, right? This was just the ones the leftover.
I by the end, I kind of knew which ones I would have a high likelihood of getting, and even the ones I kind of wanted, I would put on the list if I thought there was a low chance of getting it. So, but I did keep the ones I thought the ones I wanted and had a high chance of getting, I would keep. But by the end, it was like maybe 5 domains a day. Some days it was 2, some days it was 7. Wasn't a lot. And I was sharing by the end it was like 600 a day, 700 a day. My list got really wrong on name cult. Yeah,
but I mean, and so the bottom line is that Josh has mentioned it, Arv's mentioned it, and I'm here to say that I did the same thing. You spend a lot of time. It's not an insignificant, and that you have to factor that into the entire equation on whether this is a profitable venture for you. If you could be making more money doing something else, then it's not. But if you've got more time than money, or you are a firm believer that you want to get to where the better domain investors are, then yeah, it's a worthwhile investment. And I'm absolutely glad I did it. But literally every day for 2 years I was putting in the drops. I was spending, and I probably, a lot of times I would do like 5 days in advance, and then I would, work my way through those days. And then on the last day, I would do the next 5 days. Be nice if it lined up and I could do it on the same day of the week every week. But
Yeah.
with a 5-day gap, it was always kind of staggered. But, I would go through and I would just identify the names that I thought were worth looking at. And then on the day that they dropped, I would go back through them and eliminate some and then put in for them. But that's like 5 hours worth of work for 5 days of drops.
It's a lot of work. And you know what, now that you mention it, like, I mean, I probably got most of my kind of just gut feel for domains from doing that, right? From every day tracking what was there. And then because I was doing both the stuff that was an auction and the closeouts, that means I knew what went from one side to the other, right? And by the end, so at the beginning I was like, okay, that, I was hoping to get this and that, this domain or that domain, hoping it wouldn't go, nobody would bid on it. I could sneak it in at closeout, whatever it was. But by the end, like after I was doing it for a couple of years, like I knew 80-90% of the time, I'm not going to say anything close to 100%, but most of the time I knew, even if it had 0 bids at the start of the auction day, I knew that would go up to a certain amount, or I knew there was a certain percentage chance of me being able to grab it at closeout, and that's work, right? It's just you put in the hours, you go through the lists. It's funny here because Chuck, one of the questions he was really nice. He got me a few questions to ask. One of the questions he asked is, what are some of the key skills domain investors need, and how do they go about improving them? And that's one of the things you do is you put in the time, right? Josh, when he's come on in the on the domain socials in the past, especially in the after hours, he's shared what does he do? He sees a domain. He doesn't take it for granted that everyone's going to want it. He goes and he looks. He goes at LinkedIn and Josh, I don't want to steal your thunder. You could tell people like some of the things they can do, like to ensure that a domain has demand, because it's you have.
Yeah, well, so I only do that on higher value names, really. So like typically you're not going to find domains that you're not going to find domains under like a few $1,000s that have any kind of like exact match results at all. So, but if I'm spending, 5K, I probably want to see a few. If I'm spending 10K, I probably want to see a dozen or so. It ranges, but certainly for larger purchases, I'm looking for some stats which are typically related to TLDs, company results, and Crunchbase related results, and could be keywords that pop up in certain areas of search. Maybe it might be in Google, it might be in some of like the repos if I'm looking for a .io. Yeah.
So one thing that is a suggestion for people that if they can actually kind of hone their skills without outlaying any money is it's kind of like paper trading, but it really only works with the drops. But you could theoretically do it with expiring auctions and just see where they went. But if you do the process that I did and you look at all the pending delete.coms and you come up with your criteria, which mine is like 12 to 16, 16 max. I usually do a look at 12 and then I'll expand the search. I'm talking about searching on expireddomains.net. If you're not using expireddomains.net, I strongly encourage you to look at that, get an account, learn your way around it. But I would typically look at 12 and under by themselves, and then I would expand the search. So I was kind of looking at things, siloing them as I looked at them. Put them on your watch list and then see if they get picked up. On the day that they drop at 2:45 or 3 o'clock, if they're on your watch list and you go to deleted domains and filter by names on your watch list, and every single name that you thought was good was deleted and does not show up as registered in the far right column, you need to start looking at your criteria. And then if you export that list and put it into the bulk search and you see that a lot of them are in auction at drop catch, then that means that not only was a back order in, there were multiple back orders in, and they went to auction, which means you did pick a good name, because not only did you pick it, but 2 other people picked it, maybe more. And so you can kind of paper trade that way without investing anything and get your chops. And when you get to a point where you're reliably picking names that go to auction after they've been dropped, then that's maybe when you want to dip your toe in the water.
Yeah, that's really, really good advice, because if you start buying in volume without really ensuring that you're picking the right ones, like money goes quick in domains, right? Not only does it go quick, but it's like then you're stuck the next year. Do you renew? Don't you renew? And sometimes you get sucked into renewals and you keep on going and getting into a bigger hole and saying, oh, well, I hope. Yeah. I have to say that for myself too, like all that time I spent like listening to the old Sherpas, right? With Mike and back then it was Shane, Drew, and Frank, mostly in the main rotation. And I want to thank everybody who was on Sherpa previously, including all of you here and all the others. I don't want to start naming names, but yeah, that's another way. You want to improve your skills, just go get that information, go get that data. If you can afford it, good DNAcademy is really good. But I'm trying to think what other ways people can improve their skills. I think what Jason said is really the basics.
Well, I'll throw out one more thing, and I hate plugging our own stuff, so I appreciate you mentioning DNAcademy. But Keith DeBoer, who's an instructor at DNAcademy with myself and Jason and Aline Carrier and James Isles, Keith and I are doing a brandable boot camp next week. It's already been sold out, but if you're interested, it is a subset. It's a microcosm of everything that's in domain name investing. If you only want to learn how to invest in 2word.coms and get Keith DeBoer's secret sauce for how he's making 6 figures per year doing this, and get his list of words that he searches for on expired domains and practice every day with this paper trading that Jason was talking about, we do a boot camp for an hour a day for a week. A couple times a year. You can get on the wait list by going to dnacademy.com/bootcamp, and we'll let you know when you can sign up next. We haven't set a next date because we're gonna implement and teach the class next week. But it's a phenomenal course. Jason went through it last time. I went through it, and it's totally not my investing strategy. And I seriously thought about spending a lot of money acquiring a 2,000 domain name portfolio in this brandable space, because it's exciting to hear when Josh and Jason and you, RF, get these sales on a regular basis. And here I am with my 50 domain name premium domain name strategy, and it's exciting when I get a sale, but I'm not getting that sale very often. So I'm trying to.
But I think I
center myself around the choices that I've made in my investing career.
I think I speak for the rest of us when we say, when you make that one sale, I think the jealousy goes the other way around, right? When
you sell
pyramids,
you're all doing really well yourself too. So different strokes is.
But it's fun. Like I like where I'm at. Like what we were talking about earlier on with Paul Nix. I didn't know he was kind of in the same sort of domains that I am, but they call it bread and butter. The stuff that you sell 2word.com. They sell for $3, $4, $5, and sometimes a little bit
every single day.
Okay, $3,000, $4,000, $5,000, and it's like those are, and you can get them if you look properly. You take your time and you really look in the cracks where other people don't look. You can get them really cheap.
Yeah.
I know with that's the one thing with Josh. He's got domains that he's purchased all of the spectrum, right? Josh, you've bought domains at $5 that you've done well with, and you've bought domains at $5,000 you've done well with. So it's like,
and I bought domains at $50,000 that I've done well with.
Oh, nice. I'm really happy to hear that.
I do. There are a few people that play in all areas. I play in all areas.
Yeah.
I think that I personally back myself, and I feel confident enough in my ability to do, multiple things within the market very well, and that's because I spend a lot of time doing exactly what I'm doing right now, just living, eating, breathing domains, and just I would say I'm a opportunist, regardless of whether it be domains or anything else for that matter. So for me, I thrive on finding opportunities, and so I don't want to miss out on anything. Like right now, I have I'm brokering a deal for 1.2 million right now, which is going to be my biggest deal. It's in escrow. Nice. It's should close. Hopefully this week. We'll see. Fingers crossed. But I try to play in every area that I can because I can, right? So I wouldn't limit yourself, and I said the same to everyone. I don't limit yourself to one area. If you spend enough time, which a lot of people do. I know I see the same faces in these socials a lot. Don't limit yourself to one area, because if you work hard enough, you can dabble in multiple areas. I don't pretend to be unique in that situation. There are others like me that do very, very well in the portfolio side. They do well in the mid range. They do well in the high range, and then they dabble in some brokerage as well. You can do all of it.
Yeah, there's probably a few behind the scenes that are secret, but I think in terms of people who share their stuff, I think I have a lot of respect for you, Josh, because I mean, the rest of you two guys too, but Josh, I think he's all over the industry, like all the corners he knows. It's like a bit like Paige. Paige has done anything in this industry. He's done it in every corner. He knows there's a few people who really have gotten like a good pulse, a good read for all the corners. And that's what you need, right? Because as Josh says, there's going to be opportunities everywhere in this business, and you got to know what to look for, and you got to know what to say no to. That's the biggest thing, right? It's like somebody comes up to you with a deal. It's a $10,000 domain, it's oneword.com. Oh, is it good? Is it not good? There is no answer there, right? It depends on the name, depends on the market and all that stuff. And so sometimes some people say, oh, I got a $10,000 domain. That's a meaningless factor, right? It's like, what's it worth? How much can you sell it for? There's so many factors.
It's very easy to buy the wrong names at the higher end of the spectrum. I will say that for sure. It's very because they're so hard to come by. You can get impulsive and you can buy something and then you can say, shit, shouldn't have bought that. Or I wish I didn't pay that much.
And it comes with like this added pressure that somebody else in the industry who is successful
100%.
is offering it to you for whatever reason. And so there's a little bit of pressure that comes with that too.
100%. It's like I inflict that pressure on people in the industry all the time. Like if you don't buy this, it's okay. You're just not getting the first look at it next time. Somebody else, it's going to someone else, and that one might be a winner. And actually, I'm pretty sure Drew has spoken about this on Domain Sherpa, where he said like, yeah, I bought it, but I bought it really because I want to get first look at the next one.
That's true. That's true.
Talking about you
for deal flow.
Yeah. And that's another interesting point too, is that like I often find that some people say, okay, well, check and see what other people are doing, but it's not. I mean, you do. I mean, in many cases you do, but like there's some people who can actually buy a domain for more expensive than you, and it's a better. They were smarter at buying it than you would have been because of where they're placed. Like Drew Rosner, as you were talking about him. Like for him to buy a domain at a certain price point, it's easier because he has the Rolodex that he's worked very hard for over the years, but he's probably in a position to sell domains faster or at a better price point than you are. So sometimes just copying somebody else who's in a very different level of sort of visibility might not be exactly what you want to do. I know sometimes people say, oh, he got it for that. Well, he overpaid. I go, no, he didn't overpay because he has the Rolodex, he has the newsletters, and again, everything he worked really hard for, but he has access to a higher level of buyers than many people do. So
overpaying for me is different than overpaying for someone else. That's 100% sure. Different people can play at different price points and be okay. Some people can pay $50K for a name and then never care if they see that $50K again. It doesn't matter to them. For me, I got to say, like, okay, I'd like to get a return on this within X amount of time.
Yeah.
So
as would I.
Yeah.
Yeah. Well, I was given an example of a name right just the other day, actually, yesterday, I think it was. Because so like an example of a name that doesn't come up very often, that looks good and is going to sell for, unfortunately, in my mind, too much, is astonish.com, which is at Namejet. Phenomenal name, right? When you look at it, but then it's actually not.
Yeah.
It's actually not. There are no companies called Astonish. It's registered in very, very few TLDs, and it's gonna. I don't know. It's over 40,000 already. It's gonna sell for probably 60, and I don't know. Like, I don't see how you're gonna get how you can be sure you're gonna get an ROI on that name for a long time. But the thing is that at that price point, there's so few opportunities right now that, you sometimes you just got to gamble. You got to take a risk, and that's how a lot of investors are at the moment. That's why I'm kind of like a little bit uneasy playing in the market right now, is because it's got to a point now where a lot of the big investors, they're like, listen, I haven't seen any inventory flow for 6 months. I've got, all this cash that I'm making on sales, and I need to buy stuff, and they're paying, and the market is going like this. Even they say they're overpaying. It's like, I overpaid for it. They're doing it because there's just not enough deal flow.
Yeah. And speaking of not enough, and we have a hard stop here at 4:15 and when he has to go. And so unfortunately, this is the end of what probably could have been a 10-hour discussion, I think, for a lot of people here. We've always talked about domains, and we're not going to stop. There's so many ways to invest in this business. I think we'll maybe do a reunion at some point and continue this on. But I really appreciate you guys being here. Mike, I'll let you close up first. If there's anything you wanted to sort of leave us with, or anything you want to say about DNAcademy, anything coming up, or
I'm appreciative that you put together this whole Domainers Week, RF. I know how much work goes into conferences, and you're to be commended for such a Herculean effort to pull it all together. So congratulations on doing that. It's my honor to share the stage with Josh and Jason, two people in the industry that I have a lot of respect for, that have a lot of integrity, and I like the way that they think about investing in domain names. And the thing that I'll leave everybody with is, if you're brand new to investing, people are going to go watch this video on YouTube years from now. If you're brand new to investing, try and absorb as much as you can. You don't need to pay a lot of money. You can go watch all the Domain Sherpa shows, of which everybody has been on, because they have them archived, and Media Options has done a great job continuing to run that show and host all of the old shows. We have a free blog at dnacademy.com/blog, where we try and share lessons learned back with the community. We just put out a free guide on estate planning. So, if you're worried about what's going to happen to your domain names, if God forbid you pass away, you can start doing some planning on that. We don't require your email address or anything. Just go download it. And if an accelerated learning path might be right for you, then check out dnacademy.com. We'd love to have you in there. Thanks, Arif.
Thanks, Mike. Yeah. Josh, Jason, Josh, you're on top. I'll let you go. We talked about DNWE already, but what else you got going on? Or
I got nothing to say.
No, so guys, go to DNWE, sign up.
Nah, I do have something to say, but not about me. I have something to say. Thanks for putting this on, Arif. You're doing a great job. I know I haven't been on the socials for a long time. I kind of buried my head in the sand for a while. I just, you know how it is. Weird couple of years. But you're doing a phenomenal job, and same like Mike. It's really great chatting with you guys. I love chatting with Mike and Jason. Those guys know exactly what they're talking about. I've learned a lot from them, and not exactly sure who's in the audience, but I'm sure I know most of you. So good to be here.
A bunch of people on Clubhouse and on YouTube too. It's kind of interesting. But yeah, I mean, speaking of that, the other guy, all three of you, there's a reason why I wanted you here for this first day. I think the three of you are really great resources of information to people who want to learn. Sincerely, like really, Michael, I always praise you because you were there in my ears when I was walking Steamy for the hundreds and hundreds of hours at the beginning. But both Josh and Jason, both of you have really provided a lot of great analysis in different ways in this industry that really, like, oftentimes I don't think of. I know there's been times, Josh, when I've been sitting on my computer, like I want to get a domain, I go, oh, wait a minute, I really got to look at this, and I go, and if I don't, Josh is gonna he's gonna get mad at me. Not really, but I mean, it's like, you got to listen to that sort of that the process of what you do. You got to make sure there's buyers for it. That's the main thing. So you can't just get domains that are cool. You got to get domains that somebody's going to buy. Hey, Jason, so I didn't give you your chance. Go, I'll let you close out as well.
Well,
what you're up to.
I just want to thank you for putting on Domain Week. Thank you for taking the reins of the social for so long. Mike started it, and it was just that came at a time where I didn't know anybody in the industry really. And it was just a godsend, and for you to continue it. Like Josh said, I may not have been as much as regular of an attendant towards the end. Once things started opening back up Friday, even though I don't DJ, Fridays are really busy for me. I do have a small sideline with a comedy club, and that's kind of like they're open Friday and Saturday, and I have meetings on Friday. And so, but it was always, Domain Social was always a constant. And I just thank you for all the work you put into running it. And guys, I'm honored to be on stage with them, and you as well.
Yeah, it's totally my pleasure, and it's not really the end of the socialization of things. It's just, well, for one thing, domain names are important, right? And so when Mike Cyger here, who originally started, again, it's a pandemic social, I think you called it. I asked before.
Quarantine social, yeah.
Quarantine, that's a pandemic social. Yeah, sure. Quarantine social. That was a better word for it. Yeah. And but then so when I took it over, I wanted to call it just Domain Social. The domain was taken, but it didn't resolve anywhere. And then so I just got the Domain Social. I figured, we're all domainers, everybody's in the same group, but it's not going to matter. But then as it grew, about two months after that, Domain Social without the in front of it, there was an old forum that reappeared mysteriously, and I was like, oh crap. So I think some people tried to register there instead of the Domain Social, so that name kind of had to go a bit. And then I really want to do more of the panels exactly like this, for exactly this reason. Everybody's reaching out and saying this is amazing, and the plan basically is going forward is with the Domain podcast, it's going to be panels like this. And then at the end of these panels, I'll bring everybody on and it turns into social. So it's not like it's going to be no more socials. I think what my plan is to have one social a month. That way, those of you who have your stuff, you have your gigs and this and that, you can make a little bit more of an effort once a month. You might maybe even for an hour or two, whatever it is. I think that makes a little bit more sense. And then after all these panels I do here and there, turn into a social, there'll be a topic that everybody can discuss. And like right now, I'm sure I'm going to turn this into social. I'll start pulling people on. Actually, for those of you who want to come on in a couple minutes, just use the raise hand feature and I'll start pulling you on like a social, and we can just continue the conversation, which is the whole point of this. I mean, I kind of accidentally got this thing to a big size, but like it's only because of the whole community, right? And all you guys who I'm so looking forward to meeting in person one day and just sharing a few drinks and sharing whatever else it is, good stories in person. And I'm looking forward to that. And it's this past year has been phenomenal meeting all of you. And that's one of the main reasons why I'm doing this. I'm trying to do a charity thing too, but it's really like it's this community is full of great people who share awesome stuff, and Mike, especially because you handed the social over to me, and I was able to take it going forward. I'm really appreciative to that, and to the old Sherpa shows I listened to many times, which is probably, if you want to improve your domainer skills, Chuck, the number one thing you can do, go back, listen to all the old social, not the old socials, the old Sherpas. Go listen to all the other podcasts too. I know when I started, it was only two, the main ones. It was Andrew Allman's as well. DN Wire, But then, you know, other ones are there. Alvin's is there. Keith's is there. Josh, what's going on with yours? We'll talk. Yeah. So it's not over, but yeah, it was amazing, Josh. Just so you know, it was amazing. Your stuff, it was.
Bring it back. Bring it back.
It was good.
I don't know. I didn't get much feedback for like a while. I don't know if people liked it.
Well, I liked it.
You can ask my wife. I'm positive affirmation. Words of positive.
I think we're all that way. Like if we don't get any feedback,
Josh.
it tends to die on the vine. Yeah.
We love you, Josh.
Just if you don't hear this, hear it again. Words of affirmation. That's what I need.
We love you, Josh.
Season 1. We want to redo.
We got the brosh.
RF, thank you so much. I'm going to jump off and come back for the social.
Sure.
Thank you so much for this panel. Thanks, guys.
All right, my pleasure. Thanks, guys. If you guys want to stay, you can. Anybody who wants to come up, we're going to just continue as a social. Just put your hands up if you want. Promote the panelists. So yeah, so what we're going to do here, I think we're going to continue, for a while. Here we go. Promote the panelists.
So I got one thing I didn't get to while you're bringing.
Go. Yeah, go, Jason. Yeah, I just said Michael had to go for a bit. So
yeah, no, I
feel free to continue. Yeah.
So you had mentioned before about, when it comes around time to renew names, that maybe you decide we're not the best purchase in the first place. And I just wanted to point out that's a decision you need to be making 3 to 6 months before expiration if you want to have a chance of liquidating that name, because every name that you can get $9 for or $15 for or $29 for that you would drop, that's a huge swing from, it going away and you not getting anything for it to you getting 3 renewals for it or 2 renewals or just paying for it, or paying for a renewal with inventory that you would let go. So avail yourself of any of the methods that we have of selling to other domainers. Name liquidate. If the names are at at Namebright, you can list them on Dropcatch. You can list them at DNWE for $99. I've had good luck using reserves at Name Liquidate. So if 6 months out that this is not a name you want to keep long term, bracket it down, list it at $49 1 month. You can only list it every 30 days, list it at $39 the next month, $29, $19, and then list it with no reserve the month before you're going to drop it. And then if you squeeze it in, you can maybe list it once a month before it expires, and then list it the day after it expires, because you can list most TLDs there after expiration. And then at that point, some percentage of the names you decided to drop will have sold, and that'll help offset your renewals on the ones you're trying to keep. So I just letting people know that I get so many people coming to me and saying, I got a name that expires next week. What can I do? I'm like, oh, you can't do much right now.
Yeah.
But if you look at it, 90 days out or better yet, 120 or 180 days out, you've got time to do something to maybe get rid of it. And that's what I did last year. I mean, like I got a W-2 from W-2, W-4. I never remember which one is which, but I got, or actually it was 1099. I got a 1099 from Turn Commerce, which is who owns Namebright, for all the names I sold there last year. It was like $4,000. So
wow. Yeah.
So yeah,
because that's one of the reasons why I wanted you on today, is because I remember for the longest time, I know you're a little bit short in time, but you had this process, this like machine going that was just, I was in awe of it. Like you'd buy the domain, you'd put it up at full retail, and then it was like, okay, you discounted it a bit, and then you shuffle it off here and there, and then at a certain price point, you then put it, I think was it Name Liquidate, you'd put on twice, I think it was, or something like that. It'd be like one cycle at one price, one next, and it's just like you had this machine going. It was so impressive. You still kind of.
And so what Josh said earlier, when during the panel, was that you should list your names for wholesale simultaneously. So I have a thing, I call it a profitable liquidation, or I consider a profitable liquidation different from a wholesale sale. Wholesale is when I sell a name profitably, but at a price that a domain investor would pay and can still make profit on reselling it. liquidating something profitably is me attempting to sell something that I have no intention of keeping multiple times through multiple avenues in an attempt to extract some value from it. And so that's what I talked about. But on something that I list for wholesale, I'm not going to reduce the retail price, but on something that I am trying to profitably liquidate because it will eventually drop, then I'm going to lower the price significantly on that in the retail listings as well. So if I have a name that's just, something silly and I know I'm going to drop it, then I reduce the price on Afternic to 500, the price on Dan to 400. And then I list it on Name Liquidate with a $99 reserve and then a $49 and progressively going down depending on how much time I've got before it expires. So yeah, if you can be systematic about it, it will pay dividends. And that was a big clean out of my portfolio last year. And then, so I'm not having to spend that kind of time this year, but
yeah. Okay. Yeah.
Next
there was a
year,
backlog of a few years worth of stuff, right? Is that what you're saying? So
right.
It was like, it was,
I've had some pretty good sales this year, including a portfolio sale. So, the money's not as tight. I'm not, unless it's just an obvious dog, I'm probably renewing most things this year, but a couple years of that, and then I'll need to do it again. I'll need to reevaluate because there'll be some stuff that I renewed questionably, kind of renewed it thin, to use a poker term.
That's actually, yeah, it's a good yeah, because I'm the same way too. And now I'm at the point where I pretty much renew almost all my domains.
Yeah.
There was a month ago, after 3 years of holding domain, I realized there was a typo in it. So I dropped that one. It's like every now and then there's like, okay, whatever. But I'm guessing I'm like you right now. Like you're pretty happy with your portfolio, I'm guessing.
Yeah. I mean, like some things, and whether it's GoDaddy or NameBright, I've got a flush folder, and it's usually like ZZZ flush, so that it'll sort to the bottom when I can sort it to the bottom when I do a spreadsheet. And the obvious dogs I put in there, but I'm not putting enough in there to where it's necessarily worth my time to spend a lot of time trying to liquidate them. I mean, it's just a couple of months. Whereas last year I was really trying to get rid of the bad purchases early in my domaining career. And I was spending a lot of time doing it, but because I was spending the time doing it, I was making enough for it to be worth my time, but because there was enough material to work with. Whereas right now, having done that very aggressively last year and having improved my, presumably improved my domain picking skills, I don't have quite the amount of material to work with this year. But I'm sure a couple years down the road, I'll have plenty of dogs to change my mind about, and we'll so this will probably be like a every 2 or 3 year cycle.
Yeah, because their terms, some terms are go out of style too. Like some stuff is evergreen. That's what I like about my portfolio, is that a lot of stuff is just like, like let's say the popular one, color animal, right? That will never go out of style if it's a decent color and decent animal. But there's other stuff like, who knows? I mean, right now solar is hot, right? But maybe in 10 years from now, there's whatever's after solar is more efficient, might be something else. So, you might need to drop some of those names. That's probably a bad example because hopefully solar here is to stay, but or a good, like I don't know what term, what kind of technologies have gone out of style, like fax or stuff like that. It's things change, right? It's like, yeah. Yeah, I was always impressed when you had your sharing your cycle and your different price points. You move things down a lot, and like, yeah. But I do understand that you probably that once you got all those ones out, you're good. Like now, like I renew pretty much everything. Like every now and then, like I think about one, I'm like, yes, no, but it's like I want to say 90%, but it's more like 98%. Like I have 3,000 domains, so every month that's what, 250 domains. Like there's maybe 5 of them I think about, and maybe 1 or 2 that I drop, so it's not really part of the process. If I just click everywhere, it's not gonna make much of a difference, and chances are the ones that I might have dropped are the ones that sell, right? It's always those ones that sell.
Well, I mean, and sometimes the big thing about having a process like this is you got to follow through, because I sometimes have names that I drop leading up to the renewals, just to kind of thin out the renewals a little bit. But if you don't raise the prices up, then you end up renewing something that you sell at a low price. And I had that happen the other day. And I don't mind sharing losses. I mean, this wasn't a loss, but I don't mind sharing, mistakes as well. And it was not the end of the world, but I spiked the ball for $250. I'm sure I lowered the price leading up to a renewal cycle, but I wouldn't have dropped it. I didn't drop it. I clearly renewed it.
Yeah.
And I got that sale, and I was like, it was just one of those Afternic moments where you're like, great, I got a sale. Oh,
yeah.
yeah.
You see the 250 and you think, okay, open the email, is gonna be one more zero there. Oh no, what happened?
So, I mean, clearly, in retrospect, I feel like I undersold that name. Seller's remorse, at the end of the day, I had, maybe probably like Josh said, giving away my secrets, probably had $11 and a renewal in it or $11 and a transfer in it.
Yeah.
So selling for $250 is not the end of the world, but I don't want to do that any more often than I have to. And so clearly, if you're doing this process, if you're lowering retail prices on things that you do eventually keep, just make sure you raise them back up.
Yeah. It's probably something I would forget to do. I've sold a couple of domains. So I've sold a couple of domains in three. Most of I don't really sell 3-figure domains because I didn't have the energy that Jason does to really be methodical about the whole process, which you should be. You should be listening to him and not me in this. However, I remember some of my earliest domains I purchased. A few of them I did price in the 3 figures in Afternic, and every now and then they go off. I'm like, what? 3 figures? I was like, I don't know, but yeah. But there's if you're getting volume for them, there's nothing wrong with selling at 3 figures. If you're getting volume, right? You just got to make sure that your multiples and your volume combined for a profitable portfolio longer term.
And I don't think that unless it is something that like I was trying to do to spike, a few sales to cover renewals. I don't think that price point it has a lot to do with it, because I reduced a bunch of names on Dan to like just under $1,000.
Yeah.
And I got like a few quick sales, but like I don't think they sell any faster than $1,500 or $2,000 names.
It's really interesting you say that. I think was it Darpin from Squad Help. He mentioned a while back that there's almost zero difference in sales velocity between 1,500 and 2,000. That doesn't sound like a big difference, but I mean, if you increase your prices 33% and your sell-through rate doesn't go down at all, like that's significant. And to go further down, it's like sometimes it's just, if a domain is a certain quality, then there's going to probably be a certain quality of buyer for that potential business, and that buyer is usually prepared. Like if they're going to spend more than the registration fee, they're going to spend $2,000, right? So by pricing it at $400 or $500, you're giving up sort of money at the top end that you thought was for velocity, but in the end, really, you would almost had an equal chance of selling it. But then other cases where it's the opposite. In other cases, maybe you did price it too high at $2,000, and maybe the domain is only worth $500 to best case scenario. So yeah, but it's good. It's good to experiment and do that range, I guess. I'm bad that way. I'm pretty much 4-figure seller, and even 1,000. I don't really do. Me try to target 2 and above. But it's really important that people know it depends on what their domains are, right? Every portfolio is different. And my set of rules or standards, whatever it is, might certainly not apply to other people at all. So yeah, there's that.
Last year, the head or the founder of Squad Help said that they found no difference in sell-through rates for domains priced 2,500 versus 2,000.
Oh, is that what it was? Yeah, I thought it was 2,000 and 1,500, but yeah, exactly. So, and even more interesting, Anthony, is that I think it might be a possibility that maybe there's multiple sweet spots for certain types of domains, right? Like maybe $2,000 is a sweet spot where you get a certain velocity, and then you go further down, and like in between there's not much, and then you get back to $5,000, which is where a lot of credit cards have their limit, and you get another peak there, and peak of basically price point combined with sell-through rate, right? Because that's all I always say. Some people say, well, you should take it or not. I mean, again, this is something you really need to know your portfolio in order to make a judgment call on. But like, oftentimes I've said no to domains at $2,000 that other people say, well, why'd you say no to that? It's an offer. You could have had $2,000 in the bank. And I go, well, because I know for that specific type of domain that for every, every 3 times I say no, one of those 3 will come back to me with $7,000 or $8,000. And therefore, instead of making $6,000 for 3 domains, I'm making $8,000 selling 1 domain. I still have those 2 other ones that people wanted at $2,000 in my portfolio, right? So, but again, that might not apply to everybody. Maybe your domains are not as strong. Maybe $2,000 is the best you're going to ever get, and that's the thing. Like for myself and for Jason, I think, and a few other people who have like thousands of domains, it's easier to understand where those domains are on that sort of spectrum, right? Is it something that if I say no to, yes, 1 time out of 3, I'll get more than triple the amount, or not? And it's going to be different for every domain and every person's portfolio, but it's something you got to be aware of if you want to maximize your portfolio. Yeah.
One of the things that's kind of odd about this industry is that in other pursuits, let's say baseball or tennis, you hit the ball, maybe you do a little bit of running, and then you immediately get feedback on how well you hit the ball and how well you ran. In domaining, you can wait 10 or 20 years for that feedback. And so I think the self-correcting aspect of domain investing, like I don't even remember the mindset I was in a lot of the times when I registered domains that sell. So I'm not really benefiting from the knowledge that I should.
Yeah.
Yeah. I mean, but the other thing, and I haven't gotten paid for it, so I'm not going to mention the name, but like I got a name that sold at Afternic, and I was like, well, I'm glad it sold. I have no idea what I was thinking when I bought it. And so that's best, because it's like, I'll tell you this, that it was so and a word, a 4-letter word.
Yeah.
So, and it was a so and a noun. It wasn't like so and an adjective or an adverb where it made sense, like it was a phrase. It was like so and a noun, S-O, 4-letter noun. And I was like, well, I'm just glad that's gone. I mean, it was $1,500 sale. But one thing you mentioned a minute ago that I thought I would point out is, as you're pricing bin names close to 5,000, you mentioned $5,000 credit limit. Just remember that Dan is now charging a 2% credit card fee. Other places may pass a fee on. You're going to need to price a $5,000 name at $48.99.
Yeah.
So that if you want it to come in under that limit, otherwise the processing fee is going to push it over. That might cost you a sale. So just something to consider.
That's really interesting to keep in mind. I thought most places was like, usually I think a lot of places 3% or 2.99 or whatever it is. But yeah, 2% at Dan. That's good to know.
But do your own research.
Yeah.
And make
that's really good to keep in mind. Yeah, because exactly that. You want those spur of the moment sales. Jason, I don't know how it's for you, but I know for myself, a lot of the domains I've sold, even like, mid four figures, like never get built out. It's like somebody had a dream one night and I came up with this idea and I want to buy his domain because I'm going to build it out. And just like I was before when I had all my domains, they just don't build it out. But
want to hear something crazy? I've ended my parking experiment. I still have a few names parked, but I was cleaning out my my account at the parking company I was using, and I was removing names, and there are 20 to 25 names that I have sold that I'm still earning parking revenue on because they haven't changed the name servers.
Nice. Nice.
So these people are buying names, giving me
getting royalties. Call them royalties. We'll call them royalties. I like that.
So what you're saying is, when I sell a name, I should switch name servers to parking real quick in case they never change them.
I can't say that's a bad idea. That actually, I hadn't considered being proactive about it, but I will certainly do that now. Just change it to my parking my parking account before I do the transfer. Great idea.
You never know. Yeah, you never know.
Yeah, and so because I was, I was trying to clean up my parking account, and I was like, well, I'm not going to remove these names and stop earning on them if they're going to leave them pointed. Sure, I mean, and some of them were at one point healthy earners, and they might return. But I'm not earning big bucks off of it, but every little penny counts.
Changing a price though to something that begins with a 4, that's a red flag if you're trying to sell into China. I've been trying to play around with different price points, like the 2 9s or 3 9s at the end of a domain, or for South Asian buyers, a significantly greater discount off of the next $1,000 up. And I don't have any hard data to share there, but I think it's obvious that some possible buyers would respond better to certain price points than others.
Yeah,
I wish I had that data to share.
Yeah, well, I mean, like you said, like China, for Chinese, the lucky number is 8, right? So you want to stick some 8s in there if you think that domain it would be targeted to that market, right? And as you said, 4 is the most unlucky number. I think it means death. I'm not sure. I don't want to say too much, but yeah, in the Chinese
Death of your sales.
Death of your sales. Yeah. Okay. Yeah. So yeah, unlucky numbers. I think 4 followed by 0, but 4 being a lot more. But yeah, 8 is a lucky number there. That's why I see a lot of things will be like 888. I think because that's the thing is that for the Chinese market, right, the numbers they represent things, and I think 888 isn't just 888. It's like there's a other added meaning to it when there's 3 of them together, and it's a whole dynamic. And that's another thing. Getting back to domains is that, like, you have a distinct advantage if you know the industry or the market of the domain that you're in question, right? Like a lot of you newcomers might come in and think, well, I can't do anything. All these domainers, they're going to take everything up. But if you know something about the world in a niche where there's a business where there's money to be made, then you might have a leg up on a random domain investor who is not aware of the potential of that industry. And so yeah, a domain that they might or I might pass over because I don't understand or know that industry enough. Well, you, even as a new investor, because you know that industry, you know the key terms, the keywords, that the terms are used, what sort of aspects of the business are good, what sorts are bad. You could come in and do okay, especially if it's a niche that not too many people know about. You want to get in there before they get hot, like all the crypto stuff and all these other things. If you were the first one to buy those domains, just imagine, it's you'd be doing pretty good right now. And that's the same thing for everything, right? Imagine 20 years ago you bought solar.com. If you were working in some factory, or some research lab and solar technology, I mean, solar goes back longer than that. I'm kind of making a simple example, obviously, but if you were working in some lab on something and like, yeah, well, as a domain investor, I never heard of that before, but it, and it's going to be a term that could be worth money one day, and then you register it, you could be doing a lot better than any of us, Yeah. So again, if anybody wants to come up, just put your hand up. I'll pull you up. And a lot of you guys here from the socials usually are quite talkative. Or I pull you all up and then you let you go back down if you don't want up. Because how it works is that for the Zoom webinar format is that only the panelists show up. So if you like to come up and join us, I was hoping to make it a little social, but I think something you might be camera shy. Maybe what I'll do is I'll stop the YouTube. Maybe it's 4:45 right now. I'll probably stop it at 5 o'clock. We're Eastern time right here. Maybe do a couple of little things else I want to say. Well, Jason, did you have anything else to? I mean, you've been really. It was funny. I was worried about the timing for you, and the other guys are gone. But yeah, you share a lot. You share so much good stuff. I love it.
Oh yeah. Well, I mean, I've got a few more minutes. I'll wait till the YouTube shuts off. I just noticed the question and answer questions, and I can't see who is. Oh yeah, there's attendees. So let me see before I go answering questions.
Oh
make
yeah,
sure that the people are still there.
Chuck should still be there. Yeah, Chuck's there. And Richard was. Yeah, Richard's made a comment. Oh yeah, George. Yeah. Well, you can ask that question anyways because they might watch it and repeat or whatever it is about your co-investing. Like, is that what you're talking about?
So, I mean, the only thing I would say, and because I did it in completely the wrong way, is just outline it. Just have some, even if you guys just have an operating agreement, just something in writing that you can refer back to if there's ever any questions, and then come up with a deal that pays you for your knowledge and them for their money, or whatever the balance is. I mean, if you're investing money and your time and they're investing money, just make sure that it's fair to everybody. There's a cost of time, there's a cost of money, and that as long as you work out something that's mutually agreeable, that would be what I would recommend. I don't mind saying, without going into specifics, mine is virtually, I make pretty much all of the sales decisions. The buy decisions are joint, but we haven't been buying a lot lately. And pricing and listing, it's all up to me. Renewals are all up to me, not cost, but just handling all the administrative duties. And we have a split that we're both happy with. So, certainly if you're dealing with other domain investors, that might differ because they have the skill sets necessary to do other things. It might be a pooling of resources to spread risk. There might be any number of reasons you might want to do it. But the thing I would say is just, at least have an operating agreement in place in advance. I'm fortunate that the person that I'm in business with, and I have, our lives are intertwined in ways that would be a little bit hard to kind of deconstruct. And I've made enough to where if, he was like, hey, we're done. I'm going to send these domains to so-and-so to broker or whatever. I'd be like, all right, man, great. Because at this point we're both whole, he's gotten enough benefit and I've gotten enough, and I'm not going to sweat it down to the penny. So.
Yeah. Well, yeah. Sometimes on scale, sometimes the pennies do matter, but I know what you're saying.
Yeah. I mean,
yeah.
Right. And again, I do tons of work for this person, and our deal, our split is very generous in my direction. But I've also made this person a lot of money over the years, not domaining in other regards. So it's kind of like a bone that was thrown to me. So,
yeah.
But
I think you worked for that person for a while. I remember the details. Like, you worked for the person for a while. He wanted you to still be involved in his daddy.
Yeah. So this was a way of keeping me from seeking greener pastures as well.
I think it probably worked. I'm guessing, looking back, it worked out for both of you. I'm guessing.
Oh yeah, totally. I mean, I don't think either one of us would change a thing. I mean, sometimes he'll, if there's not a sale for a while, he'll give me a hard time, be like, this isn't really a cash flow business, is it? But I'm like, well, yeah, but you got great assets.
Yeah, but that's true. That's true. I'm sure. Because
and I culled 250 names from the portfolio, which is, $2,500 a year. So, and I'll probably cull another 200 this year, just because, we live, we learn. I'm better at picking names. There are names on there that I had nothing to do with, that he wanted early on, and so, I have to convince him now, like, hey, look, we're 2 years in, 3 years in, and had a bite on this name. Let's save that money, and he's pretty
yeah. That would be the factor for me is, well, I mean, you've got I guess the best of both worlds, because like you go in with him, and if he doesn't want to do it, you still have your sort of your own portfolio, and you have the funds to kind of like, if he doesn't want it, then I can get it for myself, right? That would be for me. Like, if you were just partners and you didn't each have your own portfolios, it'd be like how do you come to those decisions sometimes? Like, it's gotta hurt, like saying no to a domain that that other person doesn't want, or hurt buying a domain that you think is too expensive or whatever it is.
Yeah. I mean, for sure. But yeah, like you said, I mean, I can make, I can do my own thing. He's not going to do his own thing without me necessarily. But I would, if he said he was upset at any domain in my portfolio, personal portfolio, that I hadn't offered to him, I would, we would work it out. We could move that into that portfolio we would work out the details. I would not have a concern about that. So.
Yeah.
Jason, if there was a market correction in, let's say, NFTs or crypto, how would you go about thinking how to respond to that in terms of your sales prices and other strategies for your domain assets?
I'm not heavy on NFT and crypto holdings. When NFTs kind of exploded, earlier this year, I went the Nifty route for any names that I added to my portfolio in regards to that, and I realized that hasn't really generated any sales for me yet, because it seems like certain places you refer to them as Nifties, but it seems like the NFT based names actually sell better. But the Nifty names have other utility,
No, I meant more like what happens when people are no longer putting their hard-earned money into buying NFTs or cryptocurrency. Like right now, the markets are still going up, and like the pyramid scam, if that's what it is, with NFTs is still on the up. But when those people get disillusioned, are they going to come to invest in domain names? And is that going to affect their prices?
I wasn't really following. I mean, will it bring new investors into the space? I think that we may be at a precipice because, and Mike Cyger recently listed a name on OpenSea, and I saw where Zoot from Clubhouse had listed a bunch of names on OpenSea, which is the NFT marketplace for those not familiar. And so there may be, if other people follow suit, the handshake blockchain based names are there, but these guys are listing non-blockchain based names there, and they're bundling it in a way that OpenSea apparently allows for there to be user provided content with the sale. And so they are, they're offering, part of what the package is, they assist with transfer, and they give you the, upon purchase, they give you the, give you the authorization code, which is the user generated content. Whether anybody is actually buying there or not, but I think it will bring, awareness to, it may bring cross awareness to domains as digital assets to the NFT world. And we might see some crossover there. We'll also see a lot of the domain investors that have reallocated resources to NFTs come flood back into the market. I haven't seen a big downturn in retail prices on the better domains. I think I have seen maybe a little bit of less pressure on the lower end. So I think maybe there are investors that are not spending in domains that are spending in NFTs. And I don't know if you follow me on Twitter, I made the NFT plunge recently. And so I am in that space in a big way now. Let's just say it's been a profitable 24 hours for me, and leave it at that. But I will say this, that having that added focus of something else to look at has taken away from the time that I spend on domains, and the time taking away the time I spend on domains takes away the money I spend on domains, because I have less time to identify them. So kind of where you're headed with this is if the NFT market the bubble pops and all the domainers that are there rush back to domains.
Oh,
and if they have a lot of NFT money in their pocket, I mean, I don't think it's not gonna help my sales, because I'm not getting other domainers buying retail prices, but I think it'll affect the wholesale market.
Yeah. Oh, yeah. Have you noticed any softening of it lately?
Well, like I said, I think the lower end is softer. I think I'm getting names that I wouldn't necessarily have expected to get.
But like in what sort of timescale? Like in the last couple of months type of thing, or?
Yeah, I'd say, I wasn't buying heavily over the summer because I was on a trip. And I'm not buying really heavily now, but I have spent some time buying since, during August, and it seemed like the lower end had a little bit less pressure on it. I mean, you still got the huge domains and the big, the big players, the numbers that you recognize. I don't know who a lot of them go to other than huge domains. But just sometimes you'd feel like something was less contested than it would have been before. And then, it's just probably going to be like the Shanes and the Joshes of the world, people that we know and respect in the industry that we know have also crossed over to NFTs. Doesn't mean they're out of domains, but like I said, split focus, something's got to give. You can't clone yourself and spend the same amount of time on NFTs that you spend on domains and not lose the money, lose the time and focus from somewhere.
Yeah.
All these Bitcoin enthusiasts, I wonder if they're paying close enough attention to what's happened in the last week in China with the Communist Party reining in a lot of companies in the tech sector. And if they ban, as they have proposed to do, mining of Bitcoin in China, that market's going away, or it's going to the bargain bin.
It's soften, yeah, that's for sure.
And they can do it in a heartbeat, and they can enforce it.
Yeah, I mean, Bitcoin. I'm personally, and I've mined Bitcoin off and on since it was done. I mean, like altcoins are still done on GPUs, but Bitcoin used to be done on GPUs. And I was mining Bitcoin before ASICs existed or were readily available for mining Bitcoin. And Bitcoin at this point is too big to go away. Especially, China, the miners in China make up a big portion of it. But I mean, I think the code is so well designed that Bitcoin's not going to fail now. And then the price isn't going to drop precipitously just because China shuts off mining. But will there be a little more scared with their money? Yeah, sure. I wouldn't be surprised until they see it, how it shakes out.
We'll see. I mean, but yeah, I mean, just to bring it back to domains like that. There's no denying that there are people who dip into both sort of ponds, right? And you're right. I think it's like, at a certain point, if once everybody's going to get into NFTs, come on board NFTs, what's gonna, is there people going to come back? Are they going to have the money? Are they going to be like trying to, it's all you see right now. Like on my Twitter account is, especially for the one for the Domain Social, go follow Domain Social, by the way, on Twitter. And but like it's all domain people, right? It's only people I added for in the domain world, and all I see now is like NFT talk, right? That's all it is. You go into Clubhouse, go into Domain Room, and just chances are they're talking NFTs, right? So that money might have gone out, but it could be also an opportunity for others. As you said, there might be those domains that used to go for $200 that sometimes just 1 second bidder adds like several hundreds of dollars, right? Could be that domain you 2 months ago or 3 months ago you would have paid $200 for. Now that one guy you went from $50 to $200 for, now you're getting it $50. So it's entirely possible that there could be a little bit of a bargain bin sort of availability of domains for next little while the whole crypto world is kind of just exploding and has their attention elsewhere, I guess. But yeah,
I sure hope so, because I really want to be adding to my portfolio more, but prices have just been crazy.
Yeah, I've been getting offers of my portfolio. I had a couple of them recently, and yeah, I don't know. I like my portfolio. I don't want to sell it. It's like, I want to sell it, but at retail. It's like I've had a good year this year, and it's like especially at the time I wasn't supposed to have it. Like was it July? I had like a few nice ones, chunky sales, like back to back, and well, actually back to back type of thing, and it was like, oh, okay, it's I still like domains. I still don't understand NFTs, but they're making money, and I'm making money.
Send those portfolio buyers my way. I sell domains by the pound.
Oh yeah. Yeah.
I'll give you a bird dog fee.
Didn't you actually, on that topic, didn't you have I don't know how public it is, so I'm not going
No,
to.
it's been mentioned in public. I mean, there's I can't go into grave detail, but yeah, I sold 1,100 domains to one buyer earlier this year.
Yeah,
I loved it.
Yeah, was it?
If anybody wants to buy 1,100 domains today, I got the inventory for you.
Yeah, I think I heard the price point, but I don't know whether I heard it privately or not, or so we won't say it. We won't say okay. But yeah, it's up to you what you want to share. But yeah, so, but I'm curious. Did they pick and choose from your portfolio, or like you gave them like, let's say like a couple thousand, and they picked from that, or you just said these are the ones available, take it or leave it?
Well, I gave them two because of the timing seemed like it was more critical that I get something in than it turned out to be. So it was kind of split into two. They lumped it together and then returned and made an offer on a portion of them. And then I had said no cherry picking. And so I ran my metrics and I didn't feel like they had researched it and only picked the most expensive one.
Okay.
When in fact, the Estabot value was very close on the average of the entire portfolio of the entire list versus what they chose.
Yeah.
Interestingly, what they chose had a significantly, not like double, but a few $100s higher on GoDaddy valuation. So it seems like perhaps they were using the Go value as one of their metrics, maybe, or whatever they were using to choose names was similar to what Go value values, because it was a distinct difference. Estabot almost perfectly in line between what they picked and what the whole set was. Go value slightly higher, but we came to they made me an offer and we negotiated and came to a number that I was happy with and they must have been happy with because they bought it. So
yeah. Well, congrats.
So jokingly, I say I sell domains by the pound, but literally, I'll show you a list of 2,000 names, and we can negotiate a price, and I'll sell you a random whatever number you want at the negotiated price. But if you cherry pick, it'll be a different price.
Yeah. That would be my concern is the cherry picking, right? Because if you get them available, like make available most of your portfolio, you don't want to be left at the bottom of your portfolio. Even if like those domains could still be sellable, it's just less fun, right? It's like when you have your portfolio, there's something okay, rule number one with domains, there's many rule number ones, but one of the rule number ones is don't fall in love with your domains, right? And when people cherry pick from your portfolio and you start to feel hurt, that means you're doing it wrong because you're in love with your domains, but you got to make sure the math works out, I guess, more than anything else.
So let's look at Chuck's questions here since he is still here. I know the first one.
We covered most of them, but spread out here and there. I don't even know if Chuck wants to come up. Chuck, do you want to come up? I don't know if he's there or not. If anybody wants to come up, put your hand up, and I'll bring you on. Actually, for 1 second, I just want to bring up. There's somebody here, Jeff, who I wanted to bring up for a second.
Put your hands up for Detroit.
Yeah, put your hands up. Yeah. Jeff, I'm trying to pull you up. So anyways, as looking back for the last year, when I took this over from Mike, I kind of brought me out of my shell a little bit. I was never really a shy person, but I was shy like on camera and on microphone and whatever. And so, I know there's lots of people in different places, and mostly I think Clubhouse these days is where it's a lot of people are sort of going to talk to each other on a day-to-day basis. The socials only once a week. And so, on Thursdays, usually on Clubhouse, there is an individual who does this room called Talking Domains. And he's actually a new investor, new in domains, but he's trying to learn. He's doing what Michael Cyger did when Michael Cyger started. When Michael Cyger started, he was just trying to learn about the industry. He was trying to figure out a few things. He was sort of an angel investor, and he found out that some people he invested with were asking him about domain names, and so he goes, well, I have to learn. And then he goes, well, there's not much of a discussion thing around there. So that's why he started, I think it was Domain Sherpa, is to gather more information and share that information. And so, like, you know, that's like kind of what I'm trying to do last year, and with the thanks of all of you here, who each of you share a lot of information with each other. We all learn from each other. But again, like translating over to Clubhouse is one individual. Jeff, I'm trying to bring you up. But so Jeff on Clubhouse, on Thursdays he does this room called Talking Domains, and then later on he turns it into, I think it's 7 o'clock, I could be wrong, but later on in the evening he turns into what's called Hawking Domains, which is like the people try to you know sell each other domains, and but I think it's like everybody else. I know. Like Michelle and Aaron and Tom were doing rapid fire stuff. They have their interesting things at 2 o'clock in the afternoons usually with their sort of hand reg competition. And there's a lot of people I see in different places trying to do like cool things to help educate and inform people in industry. And again, like with Jeff specifically, because today is Thursday, usually his shows start at Thursday. I think it's 3 o'clock, or I think it's 4 o'clock. And so I felt a little bit bad this week because it's like I'm cutting into it, but not only cutting into it once, but because Mike and Keith were starting their course next week, I wanted them each on a different day this week. So I ended up coming one day early for today's Thursday. So it's gonna be like 2 Thursdays. I'm kind of kicking in like eating into his audience a little bit, I'm guessing. So I did want to say a shout out to him, and later on. Well, Jeff, I'm trying to pull you up here right now on the Zoom, but it doesn't seem to be, or you might not be there, whatever it is. But yeah, later on, what I'm going to do is I'm going to actually hand this off to him, maybe about probably 6 o'clock or something like that, after we finish the first session of the social. I'll let him continue, because I think it's...
He's actually talking right now.
So he's not listening to me at all. All right, well, yeah.
No, he's literally speaking right now.
Oh, okay. Okay, well, so I guess he can't hear me right now. But so yeah, so later on we'll be handing over to him, because I just want other leaders in this community to kind of like, you know, share in the spotlight. But anyway, so I'll probably go into that a little bit later. Did you guys have anything else you wanted to say on record? Because right now we're still on YouTube and we're still being recorded.
Yeah, I have a question, especially now that Jason Eisler is in the house, and that is also Jason Sheppard. How might the next round of TLDs affect your investing strategy going forward? Both what you're going to do and what you're going to avoid. Are you looking that far forward?
I've invested in very few new GTLDs, and very few. I mean, I try and limit it to a couple of CCTLDs. I'm shifting way more .com than even I had done in the past. I don't see that changing. I think the .com, until something like the handshake domains that are, you know, based on the blockchain really come into their own and become widely adopted and investable. I just don't see investability in any but the very best. If it spans the dot and it's a phrase or a term, that's great. But those are few and far between, and the time and energy it takes to find those, and most of the registries have reserved them anyway, just doesn't work for me.
Yeah. The registries have become the cherry picking domain investors, right? And we're left with the rest. In some cases, some yes, some no. For me, when you say handshake, it's not even a question of, not necessarily a question of when. It might also be a question of if, right? Handshake might never take off. I think what these guys are doing with these blockchain domains, it's amazing. Like these guys are brilliant. They're making some really awesome products that like are going to have functionality that will, you know, change the internet, change the world. However, as a domain investor, I'm not sure how investable they are, right? And those are two different things. Like you have something cool, but at the same time, it might not necessarily be something that's in huge demand to end users who are going to pay a big price. But
good distinction.
Yeah, it's a big difference, right? Like I see what these guys are doing, and like I don't understand half of it. We have a panel coming up on the weekend. I think it's Saturday, the second panel at 2:30 unless things run late like they did today. But yeah, it's what they're doing is amazing. And I'm telling you, this technology, the blockchain technology, even when it comes to domains, it's going to come up with so much cool stuff that we can't even fathom right now today. However, again, I don't know if they'll be investable or not. I think there might be a couple, like Jason said, with NGTLDs. There's a few. Like if you got sliced.bread, that could be could be something. If you guys saw the promo thing for Domainer Week, I said coolest thing since sliced.bread. I don't know how you guys caught that or not, but I don't know. It was just something that popped in my mind at the spur of the moment. But I'm sure somebody's done it before in the domain industry. I'm sure I'm not the first, but yeah, if it's spanning the dot or something that really makes a lot of business sense, yeah, some of them are there. Like some of them are there today, right? Like I've sold some .co's that were good. A lot of people have sold some .ios that made sales, but it's still a tiny fraction of overall sales in a market that's dominated by .com, right? And in theory, I think these crypto domains are almost a subset of the NGTLDs, right? Because it's like, not only do you have to say the different extension, but you also have to say, well, it's in Handshake, and you got to go to your browser and do this, and it might change over time, but it's even looking at you guys crypto, you could say crypto's a huge success, but I mean, there's still like 90% of the world that wouldn't even know how to get a Bitcoin, if their life depended on it. So it's like there's still like a lot of growth. So who knows what will happen? Things change too. I think I can't remember which panel we were on, but one of the panels earlier on, we were talking about how when the people are actually using it, like when there's usage, people, the domains in question, the extension in questions, have more visibility, which in turns encourages more usage. I can't remember who it was. Somebody at one point put a number out there, and it's don't take the number to heart, right? It's just that the theory that at a certain point, once an extension, an NGTLD or CCTLD or whatever it is, gets a certain market size, gets a certain market clout, then people turn and they go, oh, that's an option now. Like is happening right now over the last, what you call it, 12 months or 2 years with .io. It's like before that, .io is not really a viable investment. Some people would say yes, but I think those people are only ones who had enough insight to get the very best ones. And so like with all these ones that are coming out, you gotta figure out which is which work and which don't work. Yeah, I feel I'm rambling again. Wasn't my point? I was supposed to.
I think that there's I mean, and I don't know I don't think they've announced what the next round is going to be. I think they're taking submissions for the next round at this point, but I think that the repurposed CCTLDs,
yes,
.gg, .ai, .vc, .io,
.tv, the original.
I think there's money to be made there, but you have to really, really know the market. If you're a .com specialist, which I now consider myself to be, I dabbled in several of those, and most of them I let drop. I think I sold one on a domain social auction to Amar. I just the time and energy to figure out what is valuable from an investable standpoint in those versus what is investable in .com. It doesn't make sense for me. It can certainly make sense for plenty of people. I know people that make a lot of money on .co. I think Nickel is very well known for doing that. I know a lot of people that make plenty of money on .io. I don't. And every time I aspire to, I just end up with a bunch of names that have a renewal that's about 3.5 times that of my .coms. And so I remember why I don't do .io. Yeah, so I think with specialization, I think there's opportunities everywhere. I mean, Josh said it great during the panel. He's an opportunist, whether it's domains or NFTs or whether it's wholesaling domains or retailing domains or playing on the low end or playing on the high end or brokering. I think when it comes to domains, an opportunist will find a way to make it work, whether they're dealing with CCTLDs, new GTLDs, .coms, or whatever.
Yeah, well, very well said. Very well said. So I'm trying.
I do have to run now.
Yeah, Jason, I really appreciate your
I got a
time.
wedding to go to.
I
this
know. I was trying to close things up before, and I'm like, okay, I mean, it's.
Well, no, I don't get to leave till in the morning, but I got a lot of packing to do and stuff. And
I appreciate it,
uh,
Jason.
anyhow,
I really appreciate you sharing your knowledge here today, and everybody who's on the panels today. It's been a fun day. I was, I said, I thought I'd be really nervous, and it was like I just didn't have time. It was you guys seen how this week has grown just in the last week before starting. It's been great, but I really appreciate you making the effort to come on here today and share your knowledge, and I appreciate everybody else before. I'll probably take this opportunity to kind of like stop the YouTube stream. Those who want to join us on YouTube in the future, come sign up to thedomainsocial.com right now. And tomorrow, right before showtime, in the email, you'll get the Zoom link, and you can join us live. And you can ask questions, use the Q&A and whatnot. And, you can be part of the chat. It's a lot more fun and stuff. So, Jason, I'll let you go. Thank you again.
I'll take care. I'll probably join a couple times over the weekend. But
perfect. Yeah.
Have a great show, and I'll catch you
always welcome.
I want to see you.
Yeah, thanks.
Thanks.
Yeah. So on that note, I'm trying to think, is there anything else I needed to say that I missed today? When I opened up the session, there was like a whole list of stuff, and I realized, oh, it's already 1 o'clock. I was talking for a few minutes, and it kind of went on. So I'll just go over a few points that I want to do before ending the video, and then we'll get into a regular social. And I think we'll get a lot more people on stage, because I think some of you might be shy for YouTube or whatever it is. But yeah, so first thing I wanted to say is, those of you in different corners of the world where the time zone is not necessarily convenient, yeah, this, as I said, this was 2 weeks ago. This was like maybe one or two, well, no, it was probably 2 or 3 sessions. It was going to be this week in between the last 2 socials, and just blew up. My goal in the future with Domain Podcast is to be more flexible. I know a lot of people also now, Fridays is not necessarily, things in some places in the world are reopening. It might not be as convenient. So I might do a panel on Tuesday. I might do a panel on a Sunday evening where, you put your kids to bed and the weekend's over, and we can experiment. And I might do stuff. I'm a late sleeper. I might do a session at 1 o'clock in the morning, and I have no idea who that helps. Australia, India, I don't know. Do the math on my spreadsheet there. You can go across and see what time it would be in different places. But yeah, so that that's part of why I'm making the change from Domain Social to the Domain Podcast. And this Domainer Week in between is kind of just more of a celebration of the whole first part of it, and now it's going to evolve into something else. But it's certainly not the end. So yeah, those of you in different corners of the world, you're always welcome to get in touch with me. If you have an idea for a panel at some point, let me know. I have no issues doing something at midnight in my time, Eastern time, which might be convenient for you. So yeah, that's one thing I wanted to say. So sorry that this week didn't work out, because I know, some of you in places it's not convenient at times, but it will. I also, Jonathan's not here, but I really want to thank Jonathan. He's really helped me out with this quite a bit. I'll wait to him to be here next time before I get too emotional with giving him virtual hugs. The other thing too, so yeah, for the charity fund, I tried a couple of places where I could get, I'm obviously in Canada, and where I could get donations to be made in USD. It didn't happen. So those of you who always think USD, well, it'll actually be a discount for you, because it's about, I think, for every 80 cents US, it's $1 Canadian. So like if you donate $1 US, it would be, the conversions there, it's Canadian dollars. If you want the US equivalent, you got to multiply by 1.26. So whatever you want to donate, that's fine. Again, this is all free. The goal is to raise funds for charity. So maybe not today, but if by the end of the week you found you've gotten your value for it, donate to the fund, and it's going to be, you'll see, go to domainerweek.com at the top. There's the charities there. I won't, well, actually, you know what? I'll just mention them very quickly now. Where's that list? So there's going to be 5 of them. One of them is Water School, where Greg McNair was here earlier on, and he was sharing what they do. I think it's awesome work. Him and Richard, I didn't know this before, but they basically fund the administration, which is why also I was, last time I was trying to maybe move some of the donations for the education from UNESCO to EFK, which is Entrepreneurs for Knowledge, because they do the same thing, right? The board there, they also pay all the fees, and that's 100% of the donations go to the cause. There's obviously the ICA. So you go to internetcommerce.org. They're an organization that helps fight for domain investor rights, right? Zach Muscovich, he goes to these ICANN meetings and sits down in rooms with 20 other lawyers, and all the 20 other lawyers represents trademark holders, and so they try to skew UDRP rules in their favor as opposed to for domainers, and so they're fighting a good fight for us. So I'm a member of the ICA, and you should be too. if you have this, even a relatively sizable portfolio, you should be helping them out. There's also, as I'm a little bit sad to say, Thomas, our friend Thomas Grow, who last year, remember after the first online names con, we had the Domain Social afterwards. It was a crazy social. Drew Namar bid up on Kettlebell, and he, so Thomas was in the middle. And anyways, long story short, it was a really entertaining. It was really fun, and he's a great guy. He has COVID. He was really not doing very well at all for a little bit, and he's still not doing well. He's like last I heard yesterday, he's one notch above of what he was, but it was very low. So part of that's gonna go to that as well. So and yeah, so that's it. I won't ramble on too much about that. What else do you need to know? I think that's it. The rest I can go on tomorrow. Oh, for those of you watching on YouTube, again, subscribe thedomainsocial.com. You can actually go to DomainPodcast.com. It forwards to it, but the root extension is the Domain Podcast. Sorry, DomainSocial.com. See, that's why I'm changing. And just subscribe there. And so for the rest of the week, every day around 12:30 p.m. Eastern time, you'll get an email with a link to join us on Zoom, and you can be in the chat afterwards. You can come on. You can ask Q&A. It's a lot more interactive. And same thing on Clubhouse. Thank you all for listening there. There's still some of you there. You can come join us. Come join us live. It's a little bit more fun, a little more interactive. And for the YouTube, I set up live.domainaweek.com to go to the YouTube page. So the stream will only show up once it starts. I'll try and figure out a way of showing the scheduled thing, but I'm my week has been chaos so far. What else do you need to know? I just have a list of things. I think that's about it. We've already finished the day, so I'm asking people, please keep the chat polite and constructive, and no advertising and solicitation in chat, but it's too late for that. So if you did, well, too late. And that's it. Thanks to everybody. I'm sure I'll have more stuff to announce next time. So what I'm going to do, I'm going to close the YouTube. If I can find that page, we'll do that. And then am I going to end the recording? I'm not sure I'll end the recording. Maybe I probably will. Let me just get to the YouTube link first. Where are we here? Manage my videos. I think I lost my page. All right. Where are we here? Live. It's not there. Dashboard. What's going on? Well, it looks like we'll be on YouTube forever, guys. Oh, here we go. Now, how do I get out of this? Here we go. So you guys, well, wait, actually, if you guys don't want to speak on top of, here we go, later. It's good. All right, cool. And we're gonna go here, and we're gonna, how do I stop this? Oh, well, you know what? I'm grateful that technical difficulties only lasted till now. Everything was smooth. Hopefully everybody saw everything. And, oh, there it is, end stream. Wait, where'd it go? Oh, yes. Oh, no. Save. All right, you wanted to know if this was child friendly. I think we were able to get through this without too much stuff. End stream. There we go. Okay. Stop. Yes. And goodbye, everybody on YouTube. Thank you for watching. We'll see you the rest of the week, hopefully. Here we go.